what do we see interest rates doing?
Interesting. This interest rate
crude oil price,
but let it come in 2027 after Baba has won. The biggest risk to Nigeria right now is twofold. Baba lose or he's sick. Food is 60 to 90% of people's wallets, right? So if you can get food right, I think you get your inflation core right. Baba has to win.
AI boss this year, or we're still in the bubble?
I think ultimately, AI winner or loser will come from the cost of compute. A huge part of the cost of compute is electricity. I think the Chinese probably have that, right? Obviously, the US dominates from a GPU innovation standpoint. But from what I understand, China can use more inferior GPU, lever it on top of cheaper electricity cost, and can still give you the same output that a more sophisticated GPU can give you.
Hello everyone, welcome to Drinks and Mics, brought to you by Naira. My name is Ugo Dre, and welcome back to the new year. Happy New Year, everyone. If you had a dirty December, congratulations, well done. I hope you had a lot of fun, and then I hope you left some of the fun for 2026. We're in a brand new year, and of course, it's great to have the gang here with me. What's up, guys?
I've got to my right, Otunba.
Happy New Year. Good to see you guys.
I think you had the most...
I think you did.
Quiet.
Yeah. Was it quiet?
Quiet?
It was very quiet.
Oh.
I didn't do anything. I was in daddy mode.
Daddy your mental glasses and all that stuff.
I'll record you soon.
Are you recording that stuff?
Not yet.
Good to have you back, Arnold. Did you get your
No, it was moved to Easter.
Oh.
Yeah, it was moved to Easter.
So you're just a sir, right?
I'm just a sir, just a regular sir.
Just a regular sir.
Until Easter.
Christian by Olake.
Christian by Olake.
I don't want that because I was checking out your socials to see.
Okay, no. My New Year's was very quiet.
Extremely quiet. We didn't jinx it though.
I think you did. Nah, it was very quiet.
Tunji, by the way, is not here, so he's still dirtying. Mr. Sam, welcome back.
Thank you.
How you doing?
It's been a really difficult 3 weeks. Obviously, I was very close to not confirming today when Arnold reached out. For the audience sake, we lost the third partner in the company, Dami, who is also a very close family friend, and it's been a very difficult time. She was our director of operations and finance. Basically, the backbone were just traders and investors, myself and Shola. So it's been a big blow. But I got back in the office on Monday, so I'm slowly getting into the hang of things. And I thought to myself when Arnold reached out that what would she want, right? And I think she was very supportive of our need to improve the economic conversation in the country and very supportive of what I do here. So I thought that in order to honor our legacy, I should make myself present, especially given that this is the first conversation for the year.
Thank you so much, Ryan. Thank you so much. And I know it's not easy. Our condolences to you, to Shola, and to the family. I know how difficult things like this can be, and I appreciate you for being here. We didn't think that Sam was going to make it at all. It was just a long shot, but your commitment to what you do is always respected, not just to your partner as well, Shola.
Thank you.
Do accept our condolences. I'm sure everyone who's watching also wish you same as well.
Thanks.
All right, so we start with 2026. The year started already with the usual drama. So on this episode of Drinks and Mics, by the way, we're going to do something a little bit different. We're giving our economic outlook. It's probably going to be 2 or 3 part series because we really can't dissect everything today. But we're going to try as much as possible to give you guys some of our insights into what we think will happen this year. A lot of people have been asking me, but see, brought the gang here, so these guys are smarter than me, so trust me when I say that. They're going to give you guys a lot of their insights, and it'll be interesting to see how divergent opinions can be. I wish Tunji was here, but Tunji will be back next week, so I also get his own opinion. Tunji and Arnold seem to always be on the same page sometimes. All right, so Trump, I don't know whether to call it a shocker. I mean, I think it was a shocker though, because sometimes people always say taco, but I mean, I guess he shocked everyone when he went into Venezuela and picked up, the so-called president of Venezuela. And interesting thing was that it happened as the Chinese, just earlier in the day, the Chinese had met with him. And so now everybody's sitting back and wondering, what just happened? Has the world changed? So on the back of that, guys, I just want to use that as a foundation to what we think geopolitics will be in 2026. So maybe I want to start with you, Dele. Trump has basically set the marker. We don't know how Europe is going to respond. Everybody's still trying to scrambling to figure out what's going on. South America as well. You've seen a few comments from some countries. The Europeans are a little bit coy. You've seen some slightly strong remark from Putin, from the Chinese. What does this mean for your geopolitical outlook for the year already?
I think it's, maybe I'm not a big fan of Trump, but I have to give it to him.
Really?
He's very direct. He doesn't gaslight. So what you typically will find with governments is they will tell you how they are your ally, but they're stabbing you in the back. He's the kind of guy who is saying, this is what I want. This is what I want. I'm here because of the money or for the gas or for the oil. He's very clear. And clearly, that I have to respect. He's very direct about, why he's here. If you look at the conversation he had, where he had the choice of, trying to make the lady, maybe part of the new government, or taking 40 million barrels of crude oil and decide to take 40 million barrels of crude oil instead. But he's very, very clear what it is he wants to do. And frankly, when I kind of looked, I was talking to someone, and basically kidnapping a president has happened before. So there is a precedent, and I'll try and
Panama.
Noriega in Panama.
So there is a precedent, right? A precedent to that. But I think for me is how this then plays out with every other player in the world, right? So is it okay now for a president to go and do a tour or on a trip to Europe, and then he gets picked up by security agents? Is that going to be, how will the world react to such events on a going forward basis? Because you've set a very clear precedent here, right? How does China think about Taiwan on a going forward basis? How does Russia think about Ukraine on a going forward basis? What is Europe going to do or react to Trump's position? Because now he's talking about Greenland as well. So, and Trump has basically said the military option is something that can be considered. What does that really look like on a going forward basis? Are some of the things that I'm beginning to worry about. I think if Trump gets into Venezuela, I think there's going to be huge implications for oil. I feel like you can easily get production to Venezuela to maybe 5 million barrels. So my outlook for oil is that prices will potentially be under pressure.
Can debate that later.
I don't know if we can debate that. But yeah, I think it's going to be a very interesting year. It's hard to carve out what I think that space will look like, but I think it's one of those things where we have to just react as these things unfold. Right. But it's been interesting. It was interesting beginning to the year.
Arnold,
Yeah.
on the back of that, what's your outlook, geopolitics? Because I want us to go into Nigeria because there's a lot to talk about in Nigeria. So I want us to quickly just do this.
So I'll try and be quick. There's a lot to say with geopolitics and its implication on asset prices, right? Because for me, I try not to look at politics per se too much, but we can all see that Trump has politicized markets, and it started in 2023, right? At some point in Davos last year, Trump said, I want lower oil. I'm going to use oil for inflation. I'm going to use oil to control inflation, and that should give the Fed room to adjust rates. And we saw that happen in 2025. And in my view, we're going to continue seeing that. We're going to continue seeing that in 2026. Whilst Dale was talking, I was trying to remember this Margaret Thatcher quote. So I'm going to paraphrase a little bit when she said, a man's right to own a home is the foundation of a free society. I think that going into 2026, we'll see more of the same. Trump using oil to suppress inflation by bringing more oil online. Venezuela is an example. Venezuela has the largest oil reserve in the world, but they're massively underperforming, about 900 and something thousand barrels a day. Trump probably tries to push it up a few barrels, maybe 2-3 million, to suppress oil and then push rates, entice or enforce or try and get the Fed to push rates lower, because as a politician, going back to Margaret Thatcher's quote, not owning a home, as a politician, we have seen high Fed reserve rates massively affect the US economy in terms of mortgages, in terms of mortgage delinquencies, as well as jobs, right? As a politician, Trump, as a politician, I know that if Dele can have a job and buy a home and pays mortgages, he'll be fine. Inflation will be secondary. And I think that this strategy Trump's strategy from 2025 of wanting lower rates, wanting to reduce mortgage rates, wanting to encourage first-time buyers, because we're seeing U.S. first-time home buyers hit to levels that we haven't seen in a very long time. We're seeing mortgage delinquencies hit a rate that we haven't seen in a very long time.
Are we?
Yes, we are. Yeah, we're seeing mortgage delinquencies about 4%, highest we've seen in a very long time. Okay. This is all because Fed rates are too high. So I'm seeing this play as Trump wants more oil online, so inflation can be but tempered.
The time frames are slightly, because the Venezuelan crude, while you have a big reserve base, will probably take a few years for that.
It will.
Online,
it will,
and a lot of money.
But you know. On a market perspective, markets is forward-looking, right? Yeah. And you can see that play in oil. Oil has stayed subdued through this year. I mean, it might be slightly too soon to tell, but it stays subdued compared to other asset prices, right? It stay subdued, and because of this story, because of the view that Venezuela, more oil comes online. Venezuela also had its own issues, right? We thought they were going to default in their bonds. Venezuelan bonds were priced at 5 to 10 cents to the dollar. Now they're about 40 cents to the dollar, because the market actually thinks, hold on a minute, everything coming online. America getting involved in Venezuela will probably help them, whether it's repay debts or escape defaults. But anyway, I think that this oil play with Trump is still part of Trump's play when he's talked about wanting oil to be lower, wanting to give Fed the room to adjust rates. So that's my view on this.
So I'll approach this from two perspectives. The first is, this is the end of the rule-based international order. And this has underwritten peace and stability, at least in the western part of civilization, right? And increasingly China. So all bets are off, right? And as a result, the right approach, if you are a sovereign country, right, is basically to double down on your security apparatus, because we are now back to gumbo diplomacy type of scenario, so 1800s, right? So this, in my mind, this has set us back to pre 1990s, pre World War II, right, or pre World War One. So that's one. The second for me is, increasingly, I think we're starting to see evidence of a tripolar world being formed. Right. And what I mean by that is, in the past, you had the unipolar US that basically globalized supply chains and benefited quite significantly from that globalization of supply chain. And increasingly, Western industrial capacity were shipped east, right? What we are now seeing, driven by politics and driven by Trump, is we're now moving into a world that is going to be dominated by regional powers, and America, trying to bully China and didn't succeed, is beginning to realize that it needs to integrate itself into its spheres of influence. And as a result, would attempt to dominate the whole Americas. Just like I think China would attempt to dominate the whole of Asia. And then in Europe, it's going to be a tug of war between the Russians and what the Europeans are going to do. I think the Europeans are probably the most freaked out from this, right? Because they've relied for a long time on the US security umbrella, which cannot be relied on
anymore.
So what you are going to see is significant ramp up of defense capability on the European continent. Germany, UK, France, they must be shitting on their pants. So this is big. What does that mean for implications of markets, right? What does that mean for outlook? This is more longer term than 2026. But I think in order for you to have this sort of regional dominance play as opposed to a unipolar dominance, it means that you are creating multiple supply chains. It means that you have to industrialize around your ecosystem. So these have long-term effects on inflation, right? These have long-term effects on commodity prices. So what we are going to see, in my opinion, as we go through probably the next decade or the next decade and a half, is that you are going to see rapid amount of industrial spend as people begin to create this sort of tripolar world.
Interesting.
Yeah, I agree with you on the defense massively. I mean, Germany started ramping up from last year when they decided to budget for 500 billion euros.
Isn't that what the US wants anyway? Isn't that what Trump wants?
The challenge is that German companies don't even have capacity to absorb the spend from. So it's going to take a long time for that capacity to be built, which is why I think is a long-term trend, right? I think it is quite clear that the world that we lived in the last 70 to 80 years is different from the one we're going to live in.
Definitely. Definitely.
Yeah. So should resource-rich countries be worried, right? So we saw some Boxing Day action on our side from the US. Not really wanting to go into politics, but I think that it's geopolitics.
I think that our current administration, they were surprised. I think we were all surprised. Even though they claim
the talk is that and that has been corroborated by the US side. So the truth is,
it has to be corroborated by the US side because the US can't come and say they didn't know we were going to do this.
So the truth is, and I think I may have mentioned this in a prior podcast. Before economics, we talk about security, and for me, what happened on Christmas Day or Boxing Day made me realize, right, how vulnerable we are as a continent, not even as a country. And while it is difficult to model tail events, right, as an investor, and it always paralyzes you, right? I woke up that morning a bit chilled, and because at the end of the day, most of the assets that I manage on behalf of my investors are pieces of paper. And the only thing that makes those pieces of paper valid is that the government in which I am operating in, right, has the capacity to exist and enforce the rules that is laid down that gives my investors titles to those assets. And I was thinking about the possibility that if the risk of that event is 0.1 in a tail of distribution, by that morning, that has gone up to a 1% probability outcome. And that should affect what I call risk premiums. And that should affect asset pricing because it's a big, in my opinion, game changer.
Yes. So there now should be some sort of risk. Looking at resource-rich countries like Nigeria, how do you now model? I think there should be an increased risk, right? I think we should all be a bit more cautious.
But it's a very difficult risk to model.
Yeah,
but
because
it's binary. The outcome is binary.
I would also argue that we have to understand that midterms are coming. Mm-hmm. There's also, whilst Americans have done what they did in Nigeria, for me, that strike was basically Trump sent bombs on Islamic terrorists on the day Christ was born. That was the message that I saw, like on Christmas Day. Like, you know, it was that was the message that I felt he was trying to
what you
send
saw?
to his base.
It's an interesting
Right?
I don't
thing.
know. I didn't think.
I don't think it was a case of I have a long-term interest. I mean, yes, they might have a longer-term interest because obviously the more US surveillance happening, but I feel like that was the deliberateness of the day was
Performative.
yeah, exactly. He was appealing to his base. And you still saw yesterday he was talking about how he said, if we lose the midterms, right, I'm going to get impeached. So a lot of the things that I think Trump is doing is also just sort of appealing to that his
appeal to
base.
his
Which is why I don't feel like he has a long term. I don't see a follow through in the things that he does where it doesn't lead to dollars.
But it's not just Trump, right? So within the context of a tripolar world, there's a significant level of vulnerability on the continent. And
Correct.
that's what worries me.
Yeah,
Correct.
It's not just.
No,
it's
it's clear that we are.
Yeah.
It's one of those things I was thinking about it earlier today to
We're
say
takers.
we need to start looking internally to see how. Even look at
no need to look
even look at the
What are we
visa.
looking at?
Even look at the visa thing today. Now is
Yeah.
that if you're not rich, you don't have power.
There's nothing to look at. I mean, I think that my own geopolitical view is a bit more slightly hawkish. I'm very worried, and so I'm plotting different scenarios, and I'm saying, okay, so Trump goes into Greenland, and the possibility of that happening is pretty high because, just like you said, he's pandering to his base, and his base has crazy influence in him, even if it's, those core right-wing Republicans that really want Trump to push a lot of the agenda that they have been espousing for years. And they know the midterm is coming, so the sooner that
What
agenda-
strategic value does Greenland provide to the US?
Well, they claim it's a strategic location for them.
I think
Not
it's
very
more military.
clear.
I think it's more military than anything.
It appears more military, but I don't really know. But my worry is that if they do get into, seize Greenland like they want, I think
And
that
Greenland is Danish territory.
yeah, it's
right?
Danish.
So that's
territory.
NATO.
Denmark
And
is
he said
a
he
NATO,
would take
is a
from
NATO
them, Denmark.
country as well. So I
Yeah,
think that
that's-
is obviously going to break a lot of trust in the West. That will be the beginning of the break of trust in the West.
You don't think trust is broken already?
Not yet. I
Wow.
feel
really?
like I think it is. No, maybe I use the word shattered because I feel like it's still possible to bring things.
You can mend things.
You can mend things, but I feel
mean,
like
this is-
the number of scenarios that I see happening. The Venezuelan one has happened, but I think the one that I'll be more worried about is the Greenland one, because when that happens, then that essentially
It's a big FU.
ends it to Europe, because then you're now going after a strategic ally. Now, that automatically gets the EU to fast track whatever this link it is they have been planning for the last 18 months or so. So they have to start fast tracking that. And you're now going to see a lot of reordering, because my fear is that all of a sudden you're probably going to see Europe, shockingly, probably moving towards the east,
Paradoxically,
which
only people who have the industrial capacity to rapidly arm Europe are the Chinese.
that's what I'm saying. That's just crazy. And then you're now likely going to start seeing infighting within the US. Infighting mean
within Europe.
within the US itself, because you're going to see the
Infighting
left
within
and
the
the
U-
right.
okay,
Yeah,
okay,
because
okay.
now there's a lot more argument. There's a lot more distraction. Oh, you're moving with, you've now broken up with our allies and blah, blah. And
Okay.
the same
Yeah.
thing. You're going to see.
Yeah.
So I really hope it doesn't, but I'm just
I think it
worried,
does.
because I really don't know
I
what.
think Greenland
And then
does.
nobody now knows what happens with China and Taiwan, with Russia and Ukraine.
I mean,
And
if
then
I
they start
was
to look
Xi,
at-
I would go for Taiwan.
if you were China,
Yes.
yeah,
Yeah,
If
right.
you were
I
Xi,
think- yeah.
So because
yeah.
I mean, okay,
but-
so what's the scenario if he goes for if Xi goes for China for Taiwan?
I think he does, though. He goes for Taiwan.
What's going to happen? Like if they do it now,
I
what's
don't.
going to happen?
Strategically, there is no way. There is no way I don't see.
US can't defend Taiwan.
What's
I think
going to
they will.
They
I
can't.
can't.
They
I
can't.
I'm not saying they can't.
They
I'm
can't
not-
defend Taiwan.
I think they will.
It's
I think
it's
they
mass.
will
I
try.
think they
7,000
can militarily.
7,000 miles versus 180 kilometers.
I think-
war is about supply chain. Like they can't.
And so
They
why
let
has
it
why
go.
has why hasn't China done it so far?
Because there has been, we've all been pretending that we are following certain rules. Nobody wants to be a pariah. Everybody wants to be able to go to the UN and hug everybody and say that we are behaving properly. That thing, that
is
that,
the
that
US
is gone.
is the US willing to let go of semiconductors? Because that's the reason why they're in Taiwan. So the semiconductor supply. Right, and that is what fuels
very
your.
chilling-
What
it's a
fuels your-
very chilling-
what
I
I
fuels
mean,
your
these are
military base.
like crazy conversations
these are
that
like
I didn't
extreme-
think
No,
we
but these
would
are
be
conversations
having.
that we should be having because I think
Yeah.
China-Taiwan has been
Nobody
reeling
thought
for the
that.
past.
Did you think coming into this year? Did you think Trump was going to go into Venezuela?
I
And
had
kidnap him like a
suspected-
James
I
Bond movie.
suspected that there would be a thing. I
Like,
suspected
I
that
don't
there
think
would
it
be
was
a
wild,
thing.
man. Like, you gotta be impressed though.
Like, I thought it was AI.
You gotta
Because
be
when I
impressed.
woke up in the morning, I actually thought it was AI.
You
I
have
was
to
like,
be
this is not
impressed with the
possible.
way
Yeah.
that was done.
I went to Truth Social. I'm like, I saw it. I was like, this cannot be plausible. This,
Yeah.
like,
But see,
And
but
it
funny thing was
just-
that-
it's
that-
better you assassinate him on the
That
ground
plan had gone
and then
for a
you
year.
formed like a
Yeah.
militia group. But to basically get US military sanctioned operation to go and lift a sitting president, the
another
rule book
country.
is changed.
Yeah.
It is.
It's
And the
changed.
thing is that, so this has, I mean, coming to Africa and all that, this has potential impact for a lot of things, for geopolitical alignments, for commodity pricing, for commodity export, especially critical commodity exports, who you're exporting to, who you're doing business with. It has geopolitical implications for immigration as well,
Yeah.
how workers move around the world.
I mean, even
There's a
something
whole
as
lot.
basic as Trump hijacking petrol tankers.
Yeah, that's happening
I
now.
That's
don't even
wild.
rely on
Yeah.
American security. So right now,
That's
it then
happening
means
now.
that every country, China, is going to have to develop its own blue water capacity to monitor its own trade. US have been the de facto police of the world to ensure that global trade function. And the US cannot be relied
They're
upon
running the
because they're
cowboys.
kidnapping tankers
Yeah.
Because today the Russians flew a couple of planes.
to secure their tanker.
No, close.
There was
They
a-
tried,
there was a
they
Russian
tried to,
tanker.
but the US already took that. They already took that tanker.
That flew the Russian flag.
Yeah, they know. They flew a couple of planes close to a US ship, just maybe sort of a warning signal. But that was at the same time the US was taking control of the Russian.
All right, guys, so let's end this. So, outlook for geopolitically for the world. Are you know, I know this is not buy, sell, and hold, but I would just want to get your view.
I think there's a lot of chaos
chaos.
ahead for everyone. Yes.
You don't think things will normalize at some point?
No.
Maybe
Nah.
like
Man, we have
G7
three. We
might
have
just
three. We
normalize
have
things.
3 years of this guy. Right.
Yeah,
I'm
there's no
hoping.
way.
I'm hoping he
Midterms.
loses. I hope he loses the midterm. so that
If he
gets
loses
impeached.
midterms, I think he might change his position. But if he doesn't lose midterms, or more.
Yeah. We have 3 years
not
of this.
happening.
But again, markets and geopolitics is different because I actually think we are underestimating inflation. I actually think
Yeah, I had a discussion with someone about this.
as a
this week.
consequence, we are underestimating the weakness of the US dollar, right? And I also think we are underestimating commodities as an asset class and the impact that has on emerging markets.
So you think we might see
underestimating
so
the impact
when you say
commodities.
that you're expecting a commodity spike?
Yes, correct. Because think about it, like most commodities across the board has been chronically underinvested in over the last decade and a half, right? And now we are not just talking about AI. We've already had discussions in the past on the impact that AI is having on industrial capacity. And at the end of the day, when you think of data centers and industrial capacity in AI, you're talking about copper, you're talking about steel, you're talking about commodities. We don't have the global capacity ready to absorb not just AI capex, but think about all the related defense. And defense doesn't just come in its isolation because you need to build an infrastructure around it. So I think if I was to think about the trade of the decade, I think commodity prices should be one of them. Yeah.
Do you guys think, are we AI boss this year? Or we're still in a bubble? Or what do you think?
I think AI has come to stay.
AI has
stay,
come to stay.
boss.
Robotics becomes more monetized. I think this year going
You're
forward.
bullish on AI.
Yeah, but I see where AI is going. right? And I'm with it.
You do?
I see where AI is going, and I'm with it. And I think that robotics now becomes AI is starting monetization, becomes more monetized, and I think robotics becomes forefront. I agree with you on commodities. I know we had a huge commodity bull cycle, and then everything just when China dampened down, everything dampened down. I think commodities comes back into play. Something interesting for me, geopolitics though. So last quarter, I saw China and gold do something very, very crazy. China was buying 10 more times gold than they were reporting. And I was trying to figure it out. And I really think that we see in the short to medium term, I think we see a China-Taiwan situation. I think that it's related to that aggressive purchase of China gold because of Russia-Ukraine.
Yeah. Just a quick one on
Okay.
artificial intelligence. Obviously, AI is an amazing technology and an amazing invention that I think societal utility for that invention is going to be fantastic. The challenge I have is we have almost turned this new invention into some sort of religion, right? And has deployed insane amount of capital to achieve artificial general intelligence, right? And which I don't know if we will get to, right? Because the way AI works is a statistical recognition engine. It's not consciousness, right? And what I'm concerned about, right, is the obsolescence curve in new models. What do I mean by that? So ChatGPT released version 1. Version 1 hasn't been monetized. Version 2 comes. Version 2
version 1
hasn't
just
been
becomes
monetized.
obsolete.
And so the rate of decay of and the capital intensity of deploying from version to version is pretty high.
Yeah.
So unless,
and then juxtapose that with the fact that it appears the Chinese are also doing it at a cheaper cost as well.
Yes, again, I think ultimately, and this is a large debate, right? I think ultimately, AI winner or loser will come from the cost of compute, and this is why I think the Chinese the cost of compute, right? And the cost of compute is basically data centers and GPUs and those kind of stuff.
Yeah.
And basically a huge part of the cost of compute is electricity, right? And when you really think about who has the electricity capacity to produce, to drop the cost of compute to a point where AI can be cheap and affordable and widespread, I think the Chinese probably have that, right? So it's this debate because obviously the US dominates from a GPU innovation standpoint. But from what I understand, China can use more inferior GPU, lever it on top of cheaper electricity cost, and can still give you the same output that a more sophisticated GPU can give you, right? So my point is, like, I think AI is here to stay. I think the utility of AI is fantastic. I am just not confident that the scale of investment that is being thrown towards this asset class will be justified from an economic return.
Yeah.
So to your question, are we in a bubble? It's very difficult to answer that question. The reason why is when I look at the tech bubble, right? We were basically in a world where a lot of these innovative companies had no revenues, no cash flow, right? And as a result, as soon as the market started to doubt the demand on that supply that was being created, the bubble burst. This time around is slightly different. The guys who are deploying the capital has the core revenues to sustain that expenditure. But you're starting to see behaviors in terms of additional leverage capacity that is being taken. So I think we are in a bubble. I just don't think that bubble burst in 2026 because the resilience of the underlying drivers of that bubble is still strong. Until that starts to wobble and that starts to weaken. Because when you read Hyman Minsky's The Evolution of Bubbles, right? You go from like cash flow funded investments to speculative investments, and it's at the height of that speculative leveraged investment that bubbles typically burst. I think we are kind of in that intersection between cash flow funded investment and leveraged investment. So if I'm to bet, I think we can extend this euphoria a little bit longer than people anticipate.
So what will cause that demand? Sorry, because you talked about the tech bubble, and you said as soon as the demand started to get questioned, right? So what do you think will cause the demand to be questioned. I'm trying to work through
That was how I was going. Like,
the shaky foundation, right? So at some point it gets questioned. But what do you think will cause?
I can tell you. So
question?
one example that I told someone recently was when I think what could unravel it is when the actual buyers of the AI supply, which is you and I, start to really doubt the use cases in our businesses. And
can
then
we
you
doubt the use
hold on now.
cases?
Yeah, you can.
So,
and then you start to look at so it's pure economics. You're spending a lot on AI and CapEx, and you're not getting the kind of productivity premium that you expect in your numbers.
Yeah, but if you put it that
you
way,
would start to cut budget. And then when you start to cut budget, right, that starts to impact the projections that the AI companies have. That's how it typically unravels. So the key thing is the jobs that AI is replacing and then the products that we're getting out of AI. Is it increasing productivity? That's what it all boils down to. So if you look at your typical hospital, is our hospital revenues growing because they are deploying
adopting
AI and is their cost reducing? If their cost is not reducing, right, and they see that all of a sudden IT cost has probably just replaced one other
Replace
OPEX line
five people.
and at
Okay.
a higher level, then they start to
agree.
renegotiate. That's the sort of things you want to look
but
at.
when
So
do we get there? I'm trying to.
That's the thing. So no one knows yet because you're at the phase where you're seeing companies say, you know,
experimental.
what,
You're still
we're
trying to implement it.
figure out.
Yeah.
You're
Okay. So that's a long way away then. If
you're
you say
going,
that's a
you're
long way
going
away.
to, it depends. You're going to meetings or presentations from AI companies trying to sell all sorts of use cases to you. So you're at the early phase where companies are seeing as, okay, what does this do for my business? You know, so for the AI companies that have really spent, for the likes of you know Meta, Microsoft, ChatGPT, Google, I think is really seeing how well the companies that they are top buyers are actually deploying the AI products that you're getting. I think that's really where
I agree. So it's anecdotal, but we are invested in a UK-based, run by Nigerians, typically around our thesis, a UK-based legal startup.
Okay.
At the time when we invested, it wasn't AI. It was a machine learning system that assisted contract drafting.
Okay.
Right? And what has happened in the last 3 years, right? Because it's not seen as an AI company, but when you actually think about the way the algorithm works, it's almost similar type of logic. But we then get put in a different budget pool in terms of competing for capital, right? And what we then experience is for a lot of the new legal AI startups that didn't solve a problem as deep as what Definely, which is the name of the company, was solving, was getting preferential budget allocations from the large, they serve Magic Circle law firms and in-house legal teams. So, and I sit on the board of the company. And so in board meetings, we're always asking questions like, how is it that this guy with no product is getting this top law firm and signing hundreds of dollars of contract value contracts? And everybody was experimenting because everyone was afraid that if they don't deploy AI tools, right, they will lose out. This year, that is starting to change because they've signed big checks and they haven't gotten that productivity benefit that they thought they were going to get.
Interesting.
So we are now seeing in this company, the IT teams and the lawyers coming back to our product, which is not styled AI, because it was built by lawyers and for lawyers, and lawyers like the product.
And has a pure use case. So
if AI doesn't solve real practical use cases, then I think that's the problem.
So even if you go back and study dot-com bubble era things, you find out that the dot-com era companies that survived, either one survived because the products that they created had very clear use cases from the get-go, almost from the get-go, whether likes of Yahoo or Google and all that, right? Or even Facebook. And then the other ones didn't have immediate use case, but they had investors that had were willing to wait.
Burn the cash,
Burn the cash, and that's how the likes of Amazon survived, because it was easy. And then you could also see different kind of growth metrics. So this is probably where I feel this is going to unravel. And for now, it doesn't look like we're seeing it yet. So I think we're at the period where people don't want to miss out on the AI train. Yeah. And so at the moment, checks are being signed. But at some point, boards are going to sit down and say, look, where's the productivity here? Now, one last thing before we move on, because we really need to go into Nigeria. We've done over 30 minutes on geopolitics. But I want to get you guys' opinion on this. Is this the year that we start to see de-dollarization?
De-dollarization.
That's moving out of
that already started.
I mean, the claim is started.
I think the-dollarization is already ongoing, and I personally think the real trigger was the Russian-Ukraine war and the weaponization of the US dollar.
So
if you look at China trade balance, and I think people should go and spend some time on that thing, like, it's an economy that is de-dollarizing at a very rapid pace. Yes, the stock of dollar asset that it has is still significant, and it's going to be very difficult to diversify out of that. But when you look at the marginal flow of where China's trade is predominantly coming from, like, China trades less than 15% with the US today.
Yeah, but that's not enough for the dollarization now. So, I mean, but they still pay a lot of their imports, or a lot of their trade is still in dollars. So
but
their trade partners,
on an incremental basis, if you go and look at the data, a lot of trades are happening in non-dollar currencies. A lot of, and I mean, Venezuela was doing a lot of trade in non-dollars. Russia was doing a lot of trade in non-dollar. Like, if you look at some of the, because what China is doing, right, is trying, and this is another theme that I think we ignore as markets. China is trying to force a reintegration of the Eurasian corridor. What do I mean by that? China, Russia, India, from a logistics standpoint, they're not very far apart, right? But for historic reasons, legacy reasons, they didn't like each other. So when you think about it, you don't have connectivity between China and India at a significant scale. You don't have connectivity between India and Russia at a significant scale. I think another big trend that is not spoken of enough about, and I thought about that when I saw that picture a few months ago with Xi, Modi, and Putin, when they almost were French kissing in China, right? And I was like, when you look at the global equity market today, 70% of global equity market is the US. But when you combine China, the cheapest producer of industrial goods, right, to India, the cheapest producer of labor, with Russia, the cheapest producer of pretty much any commodities that you can think of, and you mix that into a cocktail and connect those three economies together, that is a boom that no one talks about, and is feasible.
I mean, extend that to BRICS, because already, I mean, that's basically the BRICS.
That's what BRICS, exactly.
Yeah, those guys
BRICS.
already command, was it 30% or so global trade, or thereabout, or 40%. So
I think dollar will still be important, but I just think that increasingly,
and the dollarization.
What signs do you see this year that would say, wow, there's a significant acceleration? Is it when some countries start to,
but I mean,
are we going to see crude oil prices no longer priced in dollars?
But what signs do you need to see, right? So this is something I talk about, and it sort of jokes about. But 2022, Russia, Ukraine. When I talk about central bank balance sheets, that was something that shocked me. When I talked about massively shift. We saw China. If you talk about China's balance sheets and China's trades, we started seeing China sell US treasuries aggressively from just pre-2020, and then 2022 it almost doubled. Yeah. And I talk about the makeup of the asset makeup of central bank balance sheets. When I look at gold, and I say in 2022, gold made up about less than 5% of central banks' balance sheets, and going into 2025, gold made up almost 30%. I don't know any more clearer sign
that you need than that.
I mean, huge structural shift.
Let's see whether people start to price crude oil in other currencies. But let's move on.
Trump with bomb beef.
I gotta think like that's like the red line that you don't cross. And I think that that will probably be the loudest ever. I mean, America can tell you what currencies you want to hold at the end of the day, your central bank, but they want to they would be worried about the currency of trade, especially.
But do you think crypto becomes a very interesting, important conversation
I think the rails. I don't know crypto. I try not to talk about crypto because I don't understand it. But the rails that crypto runs on is an alternative financial rail.
Yes, that's the purpose of it, right?
That could create and accelerate the dollarization.
I actually thought last year was one of those years that crypto would at least go mainstream when it comes to particularly DeFi.
But it did.
Not even in terms of asset performance, in terms of use cases. I thought we'll see more of DeFi last.
But I think crypto's biggest problem is the fact that we think it's an asset.
I think
we should just focus on the technology and
so even technology-wise, what we saw was stable coins. I mean, that was a big inroad with stable coins, right? As a means of cross-border transfers and all of that. But I was thinking that I would see DeFi start to play a huge role because I think that is where you would really see crypto, use cases. But let's move on, guys. We got to come to Nigeria now.
That's why I said you said it's a multi-section. Because each topic alone is an hour conversation.
You can't exhaust. But I want to give you the best of what the gang here is thinking about several things. But we're going to come to Nigeria now, and I wanted to start with inflation, but I think I want to start first with fiscal policy. Let's start because it kind of starts from there. I don't know if you guys have seen the 2026 budget assumptions. So it's not signed yet. I don't think it's even tabled with the National Assembly. I think it was just
presented.
It's presented already.
I think it's been presented.
With the MTF and all that.
Yeah.
So we've seen how much the government is budgeting. I think one of the shockers of last year was how badly we performed when it came to capex. Because I really don't know what now drives GDP growth rate. But capex was disastrous
13%.
last year. Yeah, it was pure disaster. Crude oil revenue was tanked essentially, despite all the progress that we all claim we saw.
I don't want to call it tank. What you had there is forecast error.
You think so?
Yes, I think.
Performance-wise,
I think Ministry of Finance needs to get this out together.
They overshot.
I mean, they've consistently.
They did better. Yeah, they adjusted it in 2026, but 2025, probably forecast error because I noticed that in 2026 they were a lot more conservative.
We discussed this in Drinks and Mike.
We did,
and I said what was going to give eventually was capex. That is exactly what has happened.
Yeah.
We discussed this when we talked about the oil revenue. I'm like, if this oil revenue doesn't come true, right, capex would suffer.
And it was just a disaster. So I don't know. What are your initial thoughts on the MTF? I don't know who wants to start.
So a couple of well, the first thing is we need to improve our forecasting ability.
I think they did this time around.
Actually, I find it very difficult when people I don't bother looking at the budget.
No, you gotta look at it.
I mean, you look at it, but I'm just like, it's almost a waste of time because the numbers are just.
So I think it's plucked out of thin air.
Like exactly, like
the expenditures are usually right.
Yeah, especially recurrent. I also look at it. You gotta look at it for debts. No, but you gotta look at it for taxes as well. Taxes, debt, recurrent expenditure, mostly spot on.
The things that they want to be right.
When you actually look at the budget underperformance, the thing they get really wrong is oil.
That's what they always overshoot.
They always overshoot.
They always overshoot.
I'm hoping, and this is where the non-consensus view is. So I think what they're looking at 34 trillion in revenue for next year, right? Which I think they will probably underperform that, which also by definition means that I think the fiscal deficit next year will be larger than what it was this year.
Yeah,
they are looking at what 23 trillion of fiscal deficit. I think they would undershoot on revenue, they will undershoot on capex implementation. Although some of the data I'm trying to understand is if capex implementation goes up during election years. We're still looking at the data, so we're not sure yet, but we're looking at
Does
the
it really
data.
go up?
I don't know.
So for the sake of Otunba, let me just give you some of the assumptions, right?
Yeah.
So crude oil price benchmark 2026 64.85. We're currently on about 61, even though
About
Body Light is
61.
probably 70 plus now, but 64.85.
Average price for the year, right?
The
It's
average price for the year versus 75 last year, which is to Sam's point. Target crude oil production again
2 point something.
2.06.
No, it's 1.75.
Target. They said target.
For MTF.
Yes, that's what I'm looking at here. Benchmark oil production 1.85.
Benchmark.
Yes,
Okay,
but
okay,
target
okay,
is
okay,
2.06.
okay.
So benchmark
Forget targets.
is 1.84. Exchange rate 1,512.
I think that's fair.
16.5.
I'm not saying we get it, but I think
I'm
that's
really
fair.
worried about that, but we'll get to that
No, but
later.
that's fair.
Inflation
It's
16.5. I guess that's average. Non-oil
16.5
GDP
inflation.
550. Oil GDP 7.2 trillion. Nominal GDP. I mean, leave all that one. GDP growth rate 4.68. We're dead on 4 points. And then imports and all that, blah, 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 don't bother about that. But if you go to the main budget itself, they are projecting total revenue to the Federation at about 46 trillion.
To the Federation.
Yeah, Federation.
I thought it's 54. Those numbers are.
So
The numbers the numbers here.
we need to
Yeah,
do
I mean,
a
if
lot
I
of
add
work.
taxes and all of that, main pool distribution. I mean,
We did a lot of work. I just want to say,
All seems fair
I just
on
want to
this
say
one,
something.
though.
So what do you guys think?
I just
Fiscal
want to say, I think for
policy-wise?
2026, for the first time, we might actually have a budget that realistically we
Yeah,
can get to the
it
revenue
seems
numbers.
fair.
So that's
Yeah, it
an
seems fair.
improvement, right?
Yeah.
I just want to
Especially on
say
the oil revenue
like
side.
high level things because we are trying to reconcile these numbers, and frankly, my analyst is struggling, right? But high level, I think fiscal deficits in Abuja will likely be higher relative to 2025, right?
Okay.
One, largely because I think there'll be higher capex implementation, and also they may undershoot on some of the revenue line, and it's an election year.
I mean,
so
they reduced
expenditure will
capex
go up
budget this year compared to the last.
to the last. Yeah, so that's one. But the point I always make is that we also need to look at consolidated fiscal position for Nigeria as a whole, and not just focus too much on Abuja.
On FGR.
Right.
Yeah,
So
states as well.
when you look at states, right, actually states balance sheets are actually deleveraging. They are paying bank debt. That's just how much flush capital. And remember, the states usually spend 60% plus of their budget on capex, right? So revenue accrual to the states is up almost 50% year on year. That's like 2025 on 2024. And that trend's continue to go. If you look at FAC has gone, we're looking at 8-month numbers, has gone from like 10 trillion, right? 8 months 2023 to almost 30 trillion, 8 months 2025. And obviously the states have been getting a lot of that capital. So states, I think, are on balance or basically running a slight surplus when you aggregate the state accounts together. And then you look at the federal government, they're running a deficit of around 3.4, 3.5, depending on the numbers that you can look at. So on a blended basis, you look at the total fiscal picture for Nigeria, we actually have the states that are doing very well, and I think a lot of the problems are in Abuja. And then the question now becomes, does the tax law help with the revenue collection? That's a separate debate. So that's my high level view on it. Yeah.
So currently, I think we did some analysis at Nairalytics, and last year, I think from the budget that we saw, states were doing about 17 trillion or thereabout in capex. I'm not sure if that's what, because they usually don't publish their actual, but
Yeah.
it appears that's what they're looking at. But in terms of taxes, the government is budgeting about 20, let me get that number, 23 trillion, if I'm not mistaken, for taxes.
Federation or for...
Yeah, for federal.
No,
about
that sounds too much.
Yeah, that's what it looks like. Because they have a revenue target of about 34 trillion. And hold on, let me see.
So when you say taxes, does that include oil?
Yeah. all
Okay.
taxes.
Okay.
For non-oil taxes, 8.8 trillion. Share of oil revenue, 12.2 trillion, which of course.
What's historical non-oil 2024, 20?
They always get non-oil. Non-oil is always quite...
It's non-oil. They tend to always get it. Non-oil taxes, 8.8 trillion.
Okay.
Is that enough though?
Is it enough?
Yeah.
Is it possible?
I mean,
First
it's
of all, is it
possible,
realistic?
not? Because with
Is
all
it
these
realistic?
tax stories we hear
that's
up
what
and
I-
now.
Yeah.
So again,
what
I'm-
they are
is it-
targeting at the end of the day is about 8.8 trillion. Which is about $7
I
billion.
think
that's why I was trying to figure out what's. I was trying to figure out what's
that's
the actual
viable.
for
I think so.
2024 and
it could
and
actually be higher. Because like you will see natural tax compliance as a function of the tax law. I think that would, because a lot of like, even like I went to take a haircut the other day and the barbing salon added VAT to my cost of cutting because everybody's like, oh, everybody's talking about taxes is front of mind. I even think voluntarily.
You gotta give that to Taiwo,
I even think voluntary compliance on PIT, voluntary compliance on CIT is going to increase naturally as a consequence of the tax law. So there are certain elements of the tax law that might reduce tax revenue in the short term. So for example, obviously, under the new tax law, the VAT component that accrues to the federal government goes down, right? And also there's also input VAT credits that companies can claim. And VAT is a decent chunk of total revenue. So VAT might actually undershoot, at least in the short term, as people now realize that they can claim input VAT. But the economy is improving, right? So corporate profit is improved. If you look at non-financial NGX profitability, we are back to pre-COVID levels, right? That is more cash that's to be taxed, right? So I'm confident that they would actually likely surpass the non-oil revenue side.
But wasn't the tax argument always to increase the tax base and not necessarily, okay, yes, implement tax and push tax, but wasn't always, if you don't increase the tax base, then you won't really...
That way is not really increasing the base now.
He wants to increase the base.
It's taxing the top 1%.
He wants to tax the top people.
That's always been his message.
No, but I think he's increasing the base. It will drive voluntary tax.
But I guess making it more
Um,
aware is, in a sense, increasing the base. If you're saying now your barber is now charging VAT, which they weren't before.
Yeah, this is
So
what
it's
I'm
now,
saying. There's
okay,
a
in
lot
that
of
sense,
voluntary
that awareness,
compliance
it
conversation.
does increase the base a
Like
lot.
even like companies had, so you talk about mechanisms and stuff too, because like obviously everybody knows that Asiwaju's government is very focused on tax, just like in Lagos we get taxed too on everything, right? And in terms, and you don't want a sort of a shakedown and the implications of that on your business. So for most people, legitimate business people, they are looking at their tax affairs, so ensuring that, you know what, let's err on the side of caution. And this is not, I think the top companies will probably always fully compliant in the first place anyway. But like the bottom guy, not bottom, but the other big companies are probably private and like maybe are not declaring as much as they used to. I think
They'll be more active.
You'll see an improvement in that naturally. And I'm hearing, I don't know if it's true, that we're going to have a tax amnesty program, right? And I think that's probably the right thing to do, right?
Okay.
And because what you look at in other AM, so they will tell you, because there's a lot of capital flight that happens in this country, right?
Okay.
And a lot of that capital moves overseas. There is an argument to be
like
made
double taxation,
that you can bring your money back, right? And you'll be forgiven on the future tax liabilities of that, right?
Okonjo realized several years ago.
In other EMs, that tends to be quite positive for capital.
Guys, 20 trillion in fiscal deficit versus 14 trillion last year.
They won't do 20 trillion.
Are they going to do more or less?
Less.
So you're expecting more revenue?
No. Less expenditure.
You think expenditure finally gets...
Capex. Capex will suffer again.
That is just so optimistic.
In an election year?
Yeah. They're always undershooting capex. I can't remember the quantum, but like we've never implemented fully capex.
But even at that, we always meet fiscal. We always meet fiscal deficit. The fiscal deficit targets. I think they tend to meet it, because even though you undershoot capex by how much you undershoot revenue targets.
But where are you going to get 23 trillion from?
Borrowing
markets.
According to them, they would want to borrow some of that, and then
how much of it is borrowed,
and then some from GOEs. So they said here fiscal deficit at 20.1 trillion. Privatization proceeds 189 billion, multilateral lending 2 trillion, and then new borrowing 17.8 trillion.
17
so they're coming to you guys.
Yeah, for markets.
They're coming to you. 7.8 trillion deficit.
I don't know. I think market
what does that mean for? Don't you? What are they?
Something is a lot.
That's fiscal dominance. I'm worried about that. Yeah,
I'm worried about that.
Yeah. So that has an implication on the
tough.
That's like
it's tough. Massive. It's tough, because especially if we're expecting some sort of reduction in NPR, which should
The curve will steepen. I'll buy steepeners.
Yeah. So it's going to be tough.
I'll buy
gonna
steepeners.
be tough.
If they issue anywhere close to that, it then means that you'll just see, because obviously a lot of DMO issuance are bonds. They are not bills, right? So you will see monetary policy, weakness in monetary policy transmission. It means that if that happens, right, it means that you don't want to buy too much duration. Because you are basically going to be, so what's going to happen is that the curve is going to steepen. So you get short end.
So everything will be pushed to the front.
To the back.
Push to the back, sorry, because they're trying to push everything. Yes, of course, okay.
Yeah. So
what's going to happen to domestic credit with that then? Crowding out?
That's always happened.
Because for me as an equity
worse.
guy, but like I need the 10-year curve to react positively to MPR and inflation. You get what I'm saying? Because you need your 10 premium to shrink. So 10 premium is basically the premium that you demand over and above your short-term interest rate as you take duration risk. Right? Equity is an infinite duration product. So my only proxy to long-term risk-free rate is the 10-year, right?
Yeah.
If we operate in an environment of fiscal dominance, it then means, right, that you're not going to see the reduction in interest rates that the short-term curve is suggesting. So your 10 premium increases. Obviously, that then means that, because one of my big calls for this year is that we're going to see multiple expansion in the equity market. But if I don't see significant reduction in 10 premium, then the risk on that trade is higher.
And domestic borrowing 14
trillion. They need to
trillion.
borrow more. That means they need to, so the equity won't
Domestic
bear, of course,
14.3, foreign 3.5. About $2 billion or 2-point-something billion.
We can raise $2 billion.
Yeah, that's
In a world where Trump is also doing fiscal dominance. You see, Trump sounds like Nigeria now. It's crazy when you really, some of the things, I mean, having cut my teeth in EM, a lot of the things that I'm used to seeing in Turkey, right?
You're seeing that
I'm seeing that in America. But the difference is that the scale
it's
so different.
It's huge,
so I cannot even use the frameworks that we developed to look at Turkey and other basket cases country for America. Right? I can't, because I'm just like, this is madness, because you have a situation in the US now where we have twin deficits of like 12%, right? And you are almost looking at quasi yield curve control in order to bring the yield curve lower relative to where inflation expectations are. That's fiscal dominance. And in a world of fiscal dominance, what happened? Dollar weakens, EM does well.
Yeah.
Okay, so 54 trillion budget, positive for the economy, negative for the economy. I mean, let's even discount the capex spend here, but I mean, capex spend.
Capex is big this time.
It's
30-something% of the total budget.
Yeah, capex is, but capex is still small. It's still smaller than, I think last I checked, it was smaller than debt. Capex 22 trillion, aggregate capital expenditure 22 trillion, 2026 budget.
But debt is what, like 15 point something? How much is debt?
I think debt, because debt service is 15.5 trillion. Actually, I thought capex was small.
Capex is big this time.
Okay, capex 22. I mean,
but we
slightly more than last year's capex was the highest I ever seen, 26 trillion, but it never got anywhere close to
They
it.
did 13% implementation. So if they do,
so now they are targeting 22 trillion.
And this is very important.
So is Otunba really right that this budget is just toast? It's just like.
I think some of it is, right? I think some of it is.
It's tired. It doesn't want to. It doesn't. So the point I want to make is when you really look at fiscal impulse, right? And I'm very, like, I look at rate of change of things, not absolute levels of where they are, right? So, and that's why, like, I actually think the 2026 expenditure is going to have a positive fiscal impulse. What do I mean by that? It's the rate of change of the actual amount of money that gets spent, right? So I think the actual amount of money that will be spent in 2026, right, even though the budgets are close to each other, is going to be more in 2026 than in 2025.
Where is that revenue going to come from? Taxes?
Where's that?
Well, we've already said that they're going to have to do some level of fiscal dominance. So
which, by the way, is borrowing.
I mean, the banks are more capitalized this year. So
banks are probably just going to be.
Yeah, so banks are going to.
What are they going to buy?
They're going to pile into
into securities.
Yeah, absolutely.
The banks buy FGM bonds though.
They buy treasuries massively.
Yeah, they buy bonds,
Bonds.
but really
Bonds.
the pension
Bonds.
funds that buy a lot of
Yeah.
the bonds.
Yeah, but the pension fund is not growing as fast as the way
Sorry,
the
what
budget
did
is
you
growing.
say? Sorry, Mister, what did you
The
say?
pension fund is not AUM.
pensions.
It's
That's
not
why I
growing.
ask you people, where will the money
Yeah.
come from? Because Kaduso is not going to do ways and means.
No, of course
Right?
not.
So at the end of the day, you then have to look at the growth in investments. So there's a level of investment income that is coming from the high interest rate environment that has to be reinvested. So that will fund some of it. And then the natural inflows into the pension fund, which is not very high in terms of, so investment income plus new growth, would that be enough to basically roll over the existing debt that is coming in 2026?
I think the assumption is that
and
we
then
should-
add
and then
another
add
17 trillion, which
17,
is
yeah,
why
yeah.
when I said this, I said they are going to do less than that. I actually think actual deficit at the end of the year is going to be between 14 and 15 trillion. I don't think unless something happens, right, or maybe externally, but to raise that money domestically, I don't think the capacity is there.
But it's not there.
I don't think it's there.
All right, so you got it there for the fiscals. The gang believes that we're not going to do anything close to 20 trillion in fiscal deficit, and even if we do, we're not even going to be able to finance it. So probably won't be able to do that because they want to raise 14 trillion in domestic borrowing, and they probably will get away with 3.5 trillion in foreign borrowing. But
If they do that, they will. If they are able to successfully raise that size, they could destabilize the macro recovery.
you think so? I mean, but rates are expected.
They
to go
stabilize.
down,
You think
so
if they can raise that size,
rates
they'll
are
destabilize?
going down.
Yeah, because
money
I
supply.
look at,
I don't know.
you have to
trillion.
link everything together, right?
But Sam, money supply 120 trillion. Rates are expected to come down.
Yeah,
but
but
the
rates.
thing is,
So
even
the
go down.
beauty
They
of
need to
rates
make sure the
coming
rates-
down, right? So
Is this cheaper for them?
So I look at things from a risk premium perspective. We need Nigerian risk premium to take a step change lower.
Yeah.
And we have the macro framework that would enable us do that. The only thing that will spoil it is excessive fiscal spend.
Because they need to make it attractive.
Fiscal spend or fiscal
borrowing.
Borrowing.
Yeah.
You can spend what you want to spend for
Yeah.
fiscal borrowing.
Borrowing, yeah.
Because the market needs to believe that the short-term interest rate has anchored inflation expectation to reprice the entire curve and reprice equity assets. It is at that point you really have macro stability.
You know,
I don't know if that makes sense.
It does, but
Yeah.
I would want to juxtapose it with growth, right? And what impact growth does to that dynamics and how the markets review it if it delivers kind of growth. But we'll get to GDP growth rate at some point because I will hold that and we'll get to GDP growth rate. But let's move on to inflation. So you've seen the budget. We've seen what the impact what's that thing that we did with inflation rebasing did to inflation numbers last year. We've seen CBN's projection for inflation. I think was it 16% or thereabout?
16.6 average, but
That's
end
what
at
they're
13.9.
So
It's an IMF. It's IMF. It's also IMF as well. IMF
what
also
are,
has
what
about
are your
13 as well.
your outlook for inflation?
I think
12.7.
I think inflation.
12.9.
I think inflation continues to go down. The risk to that obviously is this budget, the spending. I think oil price will probably potentially be under pressure this year. I know that Sam thinks otherwise, but I think that
My non-consensus call is oil price.
I want to know
higher.
why you see why you
We'll
think
come to
oil-
that.
oil
Let's
gets
not go
high.
back.
I'm not.
That's
I
my
can't
non-
see
it's my-
any
it's my
scenario. I'm trying to
non-consensus
figure out the story.
I
I'm trying
find
to
it
figure out the
I will
scenario.
struggle to see oil go up this year.
I can't see it.
But I think that
With
I think
geopolitics?
we should still see some level of improvement in inflation. But I don't think it's be at the speed or at the rate that it will be at a slower pace
In inflation.
Yeah. So for me, I would call him. I don't think inflation gets anywhere close to 13. I think
So really,
As in, he thinks it stays above
you think
13.
So you
Sticky?
think it exits 2026 above
No,
13?
I think
Yeah.
I won't be surprised if we start seeing single digits by the end of this year.
no.
Yes, no,
Nigeria-
why not? No,
Nigeria is not
9%,
structurally-
9-point-something percent.
Nigeria is not structurally
We're seeing
prepared
it.
for single digit
Ghana, you're
inflation.
letting Ghana fool you. The reason Ghana had that level of disinflation is that its terms of trade was usually positive. Gold price doubled.
Yeah, go price. Yeah.
Nigeria is
The
not
trade balance
tripled. Nigeria is not structurally.
Yes.
I know,
But I thought Mayo said we sell more gold than Ghana.
You said we sell
Cocoa, not cocoa.
cocoa.
Sorry, man.
I don't think Nigeria is
Gold,
structurally
right,
ready
right.
for single digit
Yeah.
inflation.
Yeah.
So
Yeah.
I don't, best case is 12. I don't think 12 is even achievable this year.
You don't think we see
You
12
don't think
this
so,
year?
guys? What are we on? Are we not on
Okay,
14?
let me just say a few things. So there's an IMF report that looked at inflation, drivers of inflation over the last since 1970
Nigeria.
in Nigeria. Proper regression analysis trying to find out what the drivers of inflation is. I think Cardinal Stone cited it in one of their reports recently. 50% of inflation
Structural.
is driven by money supply. 50, right? 25% is driven by the exchange rate. And the other 25% is structural, right?
We've been trying to hear what Zeal's view on this, because Zeal and I had this discussion. I'm not sure this was anyway. Go on.
Well, this is the IMF report. This is not
Okay.
me. I'm not the one that did the analysis. But this is like they went 50 years data and that kind of stuff. And to be honest, if you plot money supply growth and you plot inflation, the R square is very tight.
I can imagine because I know what the chart of money supply looks
that
like,
one
so I
I've
can
seen that
imagine.
one.
Yeah.
So money supply has gone. I think as at 2023, we're doing on M3 growth of like almost 80 to 90%, right? I think last year, we'll track money supply at around 15-16%, right? So when you really think about it, money supply is now growing slower than nominal GDP. That's massively contractionary, right? I should have an impact on inflation.
But you're assuming this money supply growth is due to demand.
Well,
Money supply is demand pull, right? Money supply and inflation is demand pull.
I think
So it is demand.
it's tight monetary conditions.
No, because but the argument I hear is money supply is also because of the fact that whenever we get oil proceeds, we tend to convert it into Naira. And that is why it never goes down. No matter how much you want a tight monetary policy, money supply still increases.
No. So I think money supply will increase, right? But the question is, I mean, when you look at like old economic texts like Milton Friedman and those people, like your money supply, in order for it not to be inflationary, kind of should track roughly your nominal GDP growth rate, right? So having inflation at 13-14% and nominal GDP or real GDP at 4 to 5%, I think we'll probably end up at 4.4, 4.5, wherever that number is next year. It means that like as long as money supply is not growing above 17-18%, you're actually in a contractionary monetary condition environment, right? And that is what it looks like we are in, right? So within that context, where's the inflationary pressure really going to come from? So the second part is obviously the exchange rate. The exchange rate for the first time in 13 years, right, strengthened last year, right, by 7.5%. And there's a significant pass-through to food because we have a lot of our food consumption is imported, right? So we have that. Even the ones that are not imported, the price is set by the marginal.
We actually had good harvest as well.
And we had a good harvest, right? So I think you are going to see that impact, right? And I think exchange rate, we can talk to what our views on exchange rate is, but I'm still reasonably positive on exchange rate trajectory. So I don't see any massive exchange rate shock. I see money supply remaining contract, and I think Cardoso will probably err on the side of caution with terms of rate cuts and loosening monetary conditions. So within that context, right, I think 12-13% inflation as at December 2026 is possible.
But that's mild. That's mild.
I mean, the CBN is
15,
projecting
16.
even more bullish because I mean to them average inflation rate 12.9%.
12.9.
Yeah,
average.
Yeah.
So
that means end of year.
average.
Yeah,
That's average. Yeah. So that's why I think 12%
No,
exit
that's too optimistic.
average. Let's say here average.
Do they have an end of year?
Average
End of year, no end of year.
That's
Average.
12.9.
So where are
I
they
can always
exiting?
The exit will be single for you to start.
for you to be at
start at 16 and then
election has started.
Election has started. Yeah.
Exit, that's average for 12.94. That's very aggressive.
Election has started though.
Yeah.
Started earlier
So you
than
think election spending will just drive up
started.
inflation, eh?
So there's no evidence of that.
That's what I was
by
about
the
to
way.
ask.
The data doesn't show that.
I think it's assumption.
There's
It's
evidence of that.
assumption.
There's
That's
no-
corroborated.
Yeah, we all
there's
assume
evidence.
that. Yeah.
So there are elements of
doesn't.
consumption that election spikes, media spend, advertising.
Yeah, but that's
Yes,
not
logistics.
Yeah,
But we
yeah.
look at the weight
General,
relative
weight
to the
to the
total
economy, yeah.
basket.
No,
Honestly, like food is 60 to 90% of people's wallets.
Yeah.
Right. So if you can get food right, I think you get your inflation core right. And then you go to everything that feeds into food, money supply growth, exchange rate, and those things. Yeah. But if you get food right, and harvest has been good, but I think it will start to lean. The only point I want to make is, because I've been hearing a lot of commentary around inflation is going to spike to 32% in December. It's statistical.
Yeah.
Right. Let's make it so that people don't
pure
panic.
base effects.
So it's pure base effect from the way
that, yeah.
I'm hoping NBC comes up with a correction mechanism that allows us to smooth that so that people don't panic. Right. The beauty is that from February, we will now be able to ignore completely all the noise. And they will now have real data to be tracking.
Yeah.
So December inflation might surprise negatively. If the market decides to react negatively,
no, but I think everyone's expecting it. So hopefully, if there's a reaction, there'll be a reaction. But it won't be any.
Exactly. I kind of think I agree with Arnold on this. I mean, I'm not with Daly on this one. I think would likely see. We would see on an average, we won't see single digit, but I think at some point,
but on average you won't. But I think
at some point we would see single digit inflation.
Well, you think we'll exit a single digit?
But I don't think we'll exit.
So you think it will spike back up? What will cause it?
I kind of think so.
But remember, we're also lapping
if our Q3s, if we know that Q3 end of Q3,
remember we are lapping on favorable base because this year was a good base effect year because the inflationary spike happened last year. Right. So your base is already high.
But there was a rebase already.
To get a significant disinflation from a high base,
it's not going to happen.
It's tough. It's tough.
That's why I think we could touch single digit at some point and then
yeah, but what will cause that spike if we know that? Oh, base effects.
Yeah.
Okay.
Yeah. I think
single digits is hard for me to
base
buy.
effects.
I mean, I'll be happy if they're single digits.
But I doubt that we exit at single digits. I really doubt it.
I don't even see.
I asked Zil this question, but he didn't give me a direct answer. Like, what are the smart
Because
people
Zil never
inside
gave
CBN? Not Zil, Mayo. And I was like, what do we think structural inflation once you neutralize exchange rates and monetary condition in Nigeria is?
It's difficult for them.
I think 12.
The smart guys inside CBN, all those PhD they hire should have a model.
Should have the answer. All right, guys, let's move to interest rates. I mean, everybody expects a rate cut in February. So is that going to be the direction for interest rate?
I think interest rates will. I just don't. Again, I think we'll cut interest rates this year. I just don't think it would be at the speed. I don't think it will be aggressive.
Why?
I agree.
I don't think it'll be
Why?
aggressive.
Do you have a number? Do you have a number?
Yeah, for all the reasons
Do you have a number through the year?
So we're going to keep having that huge delta between
But I'm saying,
NPR
we've talked
and
about.
inflation.
We just talked about. You talked about the budget. You've talked about how much we're looking to raise, how much we're looking to spend, right? You're looking at how much you're looking to borrow.
Yeah, so that's what throws me off.
Right. So when you look at all of these things, and I'm saying that if central bank is looking at all of what the government is looking to do, and saying,
what's the connection then? Why should the central bank be bothered or worried about the level of
because they want to make it attractive to raise a 17
is
trillion.
trying to raise. If the government is saying you
Unless they
need
push
this
it to
debt to sustain GDP growth rate,
so you see all of that happening. I wouldn't be comfortable cutting interest rates in an environment where government is looking to spend more.
but doesn't that send the wrong message? You're not cutting
what
the
message-
interest
what
rate.
message-
Wait, hold on.
Say it again.
You're
You're
not
not
cutting
cutting
the
interest
interest
rates
rate in a low inflation environment. Is essentially telling
But
the market that you don't.
I don't agree with you.
the numbers.
I don't agree with you that there's no inflation environment.
That's what I'm saying.
That's the difference. I don't agree with you.
So that's you. But for a central bank, isn't that sending the wrong message?
So I think there's consensus that rates are going to go lower.
Yeah.
The debate is how deep is that cut going to be. I am with Dele that we are, in my mind, I think we'll probably get 300 bips of rate cuts cumulatively over 2020.
What?
So
we end at 24%?
Nah,
Yeah, but that would
I think-
basically, because look at the maths now, that would basically, because Cardoso wants market rates to be
Realistic.
So
real
is this
better,
an
right?
inflation play or a real play, like you're saying? Is this an exchange rate play or
He
a real
wants
play?
positive real exchange rate. So if we are looking at average exchange rates of 14%, 15%, and you add 300-400 bips of basically 300-400 bips of premium to that, right? You are basically then looking at real interest market rate that should hover between 18 to 20%.
Yeah.
Right? If you cut your interest rate by 300 basis points, right? That then take your asymmetric corridor to around that level.
About, yeah.
And your asymmetric corridor SDF is basically your marginal price setter for the entire curve.
Yeah.
So if your STF is at 20, so 20 is currently at 24.5 or wherever it is now, and you take another 300 bips, it's around like 21%.
21.
That's consistent. Do you get what I'm saying?
Yeah, no, I agree. So for me, I see.
So is your
I just think the
view
cut
on
is
inflation
deeper.
changing then? If you
No, I
agree?
just think the cut is deeper because I think we go into a slightly deeper deflationary environment. So I think that consensus is
This
NPR
man,
gets cuts,
even in
right?
the macro notes that he wrote, he told you his core priority is inflation.
Inflation, yeah.
He told you.
Yeah, but I still think
the
that
guy
we get.
told you what he's going to do.
If I had to put a number, I'd say 500 basis points cumulatively. If I had to put a number, that's the number I've been working with going into 2026.
I think 300. I think it can do as much as 400 without losing credibility.
So you think
anything more than
400
that,
is too,
the
I
market
don't know.
will like that.
I'm sitting on 5 because I'm seeing a deeper deflationary environment than you guys are. So 500 makes sense to me.
Anything less than a 10% interest rate cut.
1,000 basis points.
Then I'm disappointed.
1,000.
You need to have
Let me go to my asset store.
When you see
less
this,
than 10%.
when you see this,
So unless the only way
I'm looking at inflation. That's it. I'm looking at real
so
positive rates.
what's your average inflation?
No,
Ah,
but remember, you have to
are-
look at how it's very important to look at how the MPC affects market rates.
Not
If you
that much
cut,
anyways.
if you cut it from 27 to 17 and you keep the 250 basis point asymmetric corridor, how much is it? You are now telling me that SLF will now be at 15 or 14 or whatever that number is, right? When inflation, you are talking
You guys
about
are already
13 to
seeing. You guys
14.
are already seeing risk-free rates go down. You're seeing treasury rates are likely to go.
Look at them
But
in
that's not
yield.
real now.
They're
That's not real.
18% yield.
That's not
What are their
real now.
yields
That's
now?
not
They're
real
about
now.
What are their
18%
yields now?
yield. They're
Okay.
18%, 18, 19, 20%.
It's not even real, Seth. It's not even.
Why is it not real?
That's driven by excessive liquidity.
That's it. I mean, aren't we in a market?
No. Almost for
Doesn't
me,
that depict
almost for
what
me,
the market
almost for
really-
I would
what
use
the
the
real
almost.
rate is?
liquidity is demand,
Almost
right?
where
So
yeah.
liquidity is demand, so it's the market. Yeah,
That's what I'm saying.
Omo and NTB are starting to converge.
yeah.
Yeah.
And I think 2026 they likely
Where do you think
do
it ends?
that.
We're still on rate.
I've told
Where do
you that
think yields
yield
will be?
will end around between 18 to 20%, which means discounts.
What?
Which means
Yield will end.
discounts.
So say again, yield will end the year.
Between around yield, not discounts.
Short-term
Will be
yield.
Treasury bill, 1 year.
around 18%. Yes, that's my view.
End of year.
So discounts around
discounts are
14% or
14%.
whatever.
It's hard for me to give end of year treasury bill yield.
Yeah.
It's hard.
Yeah, that's what I actually
I
think.
mean, with the
I actually
same
think a lot of the rate cut is already priced by the market.
Yeah, so it's priced in already.
So if you go
So
out
it's
and buy
given end of
very
year.
bills here, you will
Yeah.
chop small cake.
Yeah.
So you guys are
Okay.
seeing treasury bills at 40% discount.
Discount.
Ah.
Discount.
Discount.
14.
No,
Anyway,
no,
in that world,
I say it lower though. Yeah, I say it lower. I think there's just so much liquidity out there. I just think there's just so much liquidity out there.
I think it's hard to plot a
There
treasury
is.
bill end
It
of year
is
yield
difficult
for Nigeria when
It is.
With the borrowing plan of 17 trillion.
Yeah. You don't think the market
No,
can
but a
borrow
lot of
that?
the borrowing plan will affect more the long end, right?
Yeah, More of the long end. But I'm just saying,
That's
but they would, if you don't get long end, they will come for
no,
short
but
term.
they can't front load all that.
I mean,
They
come along,
can't
but
front
I'm saying,
load
but
that.
you
We'll
actually
be
you have to
screwed.
come to that market, right?
Yeah, because they did a lot of NTB in
they did now.
2024. 2024 was a lot of NTB.
You have to find a way to plug the holes, working capital,
Yeah.
and
Well,
all of that
that's
stuff.
the-
Okay,
All
so
has
you
to be
guys are
financed.
predicting your
500
outlook for
basis
the year
points.
is 500 basis point.
Through the year, cuts,
NPR.
NPR cuts, yeah.
You're
Yeah.
looking at risk-free rate treasury bills, 14% discount. Yield.
I'll come back
I'm
to you on
not
that
at
one. I'll come back
500,
to you on that. I'll come back to you on that one.
I'm on
You're
300.
you're even at 300.
Is it 300?
That means
Yeah.
you're going to have like 3 of the
It's
NPCs.
flat. I mean,
NPCs
you're
are
pretty much flat through the
25%
year
cut.
now.
They should come not bother with any
You're
NPCs.
flat through the year. You're flat through the year.
No need for
It's
NPC meetings
200.
now.
That's 300.
Yeah, that's like flat. That's
Yeah,
like
it's flat.
nothing.
Yeah, it's too flat
Don't
for
even
me.
bother with any meetings. But anyway,
It's too flat for me.
don't bother with any meetings at all.
We have a hawkish.
Oh, interesting.
I like
interesting.
Very much,
Interesting.
very much so.
Interesting.
But look, this interest rate
Crude
will
oil
come,
price.
but let it come in 2027 after Baba has won
But the bigger the cut, the better it is for equities, though. Right.
Are you calling the election?
Baba has to win, though. I didn't vote for the guy. I don't like him. Let's just put it on the record. I did in 2020, but right now for macro stability
He's working.
reason,
He's
the
working.
guy
He's
has to
working.
win. Everything else, let's fight in 2030. The biggest risk to Nigeria right now is twofold. Baba
civil
lose
unrest,
or he's sick. That's the honest truth. Because number one, he's the only one that seems capable of holding the
Bringing
political
everything
dogs
together.
away.
Yeah.
Right, which is very, very important. And number two, one of the reasons, because I heard one of the reasons Cardoso is able to do what he's doing is that Baba basically have told them that if he can't even talk to Cardoso, that is radio that they will hear that Cardoso has resigned. So that's what I heard.
Let's move. Time.
So like for macro stability's sake, and for continuity's sake, not because I like the politics. I don't like commenting on politics. I think we need continuity.
He needs to finish the
Crude oil price.
We'll fight in 2031.
Please, I want to hear Sam's crude oil
price.
because I think crude oil stays around the same. I think we range,
price.
right?
Crude oil price.
You know, WTI
where
stays around
the
60 below 60.
The government is projecting $63.
Yeah. But Sam seems to be extremely bullish.
No, I won't use the word extremely bullish. But there are a couple of things that was interesting to me last year.
Yeah.
One was dollar weakness, which I expect to continue. And there's a relationship between weakness, dollars, and commodity pricing. Obviously, there's a lot of supply suppression.
Oil was oil was out of it, right? So we saw copper, we saw gold, we saw platinum.
So oil, the energy complex completely missed the commodity rally of 2025.
Yeah.
I think there's a catch-up trade to be done.
What will drive the catch-up?
Again, so what will drive the
where's the
catch-up
demand
trade is a
coming
couple of things. I don't think, and this is a bit speculative, that the Saudis have the level of excess capacity that we think they do. Because they've been steadily...
You think it's a bluff?
They've been steadily increasing capacity. And secondly, this even MBS, right, is now at a point where he has all these things that he needs to spend money on, right? He's giving Trump a pass since he came into office by committing to suppress supply. Number one is, does he have the ability to continue to do that, right? Given that he's been increasing capacity gradually over time to keep supply lower. Number two is, what is the fiscal cost to Saudi's own vision program as a consequence of this? At some point, the calculus, in my mind, is going to favor a move to relatively higher oil prices. So the macro, right, like, and then the other part that I think, but I don't know when it kicks in, is this tripolar world industrialization. Because at the end of the day, energy is fungible. You cannot say everybody wants to spend money and at the same time, you are bearish on oil.
Okay. I see that. I actually see that part. If expenditures, guys, if everyone's spending more money, then that's demand, right? So I see that, but
but it depends on what they're spending on. They're spending on.
But if you're talking about defense, if you're talking about defense,
there's that copper, na steel.
So that's the thing. So why do you see other commodity
that's why copper's all-time high. Copper's all-time high right now.
My view is this. We know that the dollar is going to devalue, so there's going to be inflation in the US. So the question is, how does Trump want to control that?
Oil.
It's oil. There's a series on.
I think this guy is a PlayStation guy. We just press one button. Oil price.
It's been working out so far. So far, it's been working out.
But that's how market is now.
That's the only
when
thing.
Godwin decided to bring interest rate down, it worked for a while now.
That's the only thing that
it always works.
That's the only thing that I think
until it stops working.
I think Trump can do that can allow for instant troop into the economy is to bring down the cost per gallon, right? And so he's going to want to do that.
Already at all-time low. Where are they going to? Like $60 oil
is
COVID level valuation.
Which I feel like
if you adjust that for inflation, oil price is already in a depression.
I think 50 is possible. 50 to 55.
50
to 55.
Brent.
We might touch
Brent,
it, but there's no.
Brent is at
I don't
57
Brent's
now.
at 61
We can
now.
touch
Brent's at
it, but
61.
there's
No,
by
Brent's at
this
61.
time,
No, as of today,
by this time
Brent
next
went
year, I think
below
oil price
60.
is higher than where
At
it is
least
today.
before we started.
I think the
before we
average for
started.
this year maybe 50 to 65.
Before we started.
I think by this time next year, oil is higher than
If
where it is
Venezuela
today.
plays out the way it plays
Before it
out,
started.
because if you look at the way Iran was able to ramp up capacity,
Did I miss this?
Just
Iran
before-
went very quickly
just-
from 1 to
just
3
before we started.
in terms of oil production, right? I feel like Venezuela all you need to just do
wow.
is reopen
Okay.
those wells. You can easily get back to 3 million, right? And frankly, one of the things is
Venezuela is not getting to 3 million in the next decade.
I just
It's not happening.
Nah, don't say decade.
I'm
Venezuela
telling you,
decade.
see, I read a shocking report, right? And what they said was for Venezuela to get to $3.5 million, these guys barrels, these guys need to sink in over 40 or is it $50 billion?
US can do that.
And
fast.
do that now, what is-
and even at
But the
that,
question
no,
is
hold
that
on.
it's a supply chain.
Yeah,
it takes
even at
time.
the, exactly.
They
They have
Yeah, but it's not a decade. It's not a decade. It's not a decade. It's not a
I'll
decade.
send you
It's
that.
not a
So
decade.
I understand that
It's
I'll send that to
PDVSA,
you.
which is the state oil
PDVSA,
company,
yeah.
is decimated.
They are there.
In terms of capacity.
Yes.
You have
So,
to hire the
to
engineers.
build
You
that
have to move
capacity
them.
to pump that kind of would take time.
I agree with
And you're in
I
a very
agree with you.
uncertain world where
agree
things
with you.
change. So, and by the way,
If you put
Saudi's
a
numbers
gun-
are down.
if you-
Saudi has been producing actually much lower than they have, at least last year.
no, but you have to again
So
for me,
where's the boom?
Saudi's position is volume, not price.
That's what I'm saying.
That's
Their
what
volumes
drives
are
it.
down.
So if
So
price,
their volume saying, I
if
think
price
I think
goes down,
MBS
Saudi will pump more.
their volumes are down.
No, they will pump more. They've always been very
so
clear.
what are they looking at?
Market
What is
share
What
is
sort
very
of
important for
what sort
Saudi.
of price is OPEC?
Market share
looking
very. I mean, OPEC will
Because
probably be at around 60.
I think the sweet spot is usually between 65, 70 for
Oil
them.
price is a very dangerous thing to call because it ruins careers. But if you put a gun to my head, I expect that we might see two things. One is OPEC moves to tighten the market a bit more. And as a consequence, you see relatively higher oil price.
Exactly.
We talked about a world where a bipolar world, tripolar world now, where nobody even really cares what the other person is doing anymore. Right?
Yeah,
So
but
if-
OPEC is still
but
an
OPEC is the
organization that's
cartel is still
together.
there.
Yeah.
And also, I really think the Saudis are not in a good place fiscally.
You think so?
Yeah.
Because I hear
What
whispers
is the-
about the Neon project getting, not.
They are not in a and
they're either
the
looking to
fastest dial you can move to solve that fiscal mess
It's oil price.
is oil price.
all volume.
And then you add to that the fact that, I mean, if you look at the oil price from a perspective of non-dollar currency, in commodities, what solves low prices is low prices. You get what I'm saying?
But will Trump
if you have low prices in any commodity for a sustained period of time,
will Trump respect
you are
a
always
supply?
betting the higher prices are going to come afterwards.
Yeah.
So I think a lot of us are looking through the rear view mirror, and because of how badly oil has performed,
it's gonna keep
and we
on.
just think it's going to continue.
My problem is
think we might see
I
an
don't trust that
inflection.
Trump is going to respect the way the market has always run. I feel like Trump is going to do what he feels he needs to do. He wants to be the biggest energy supplier of the world. He wants to pump. He wants to sell oil, and that's what he's going to do. And the moment he does that, where he's not playing by the rules, then the bets are off for everybody else. That's what's played out right now. That's what's playing out right now. That's what I think is going to play out. Where everyone's going to say, you know what? Since you're going to do what you want to do, we will do what we want to do as well.
For oil price then?
So I feel like the supply
So
will
Delay
increase.
says it's gonna
Production
be,
is going to increase
it's gonna
production,
be- sorry.
which
Sorry.
inevitably will cause the prices to come
You
down.
think the cartel weakens this year?
Yeah.
So we
I
are
feel like-
on
I feel like-
we're on opposite ends of the trade. Then
Yeah.
it's nice. It's good for a market.
Yeah, buyer and the seller.
We'll do our assessment
All
at
right,
the end
let's
of
see if
the
you're
year.
opposite the end of the trade with Forex. Where do you see the exchange rate landing this year? I mean, Sam and I were correct last year. I know. I always like to emphasize that.
Is it more of the same?
Yeah. I mean, I think we should be, upside 1,350, downside 1,4, just slightly under 1,5. That's what I think. Election
I'll
on
put a
election.
plus or minus 10% on whatever average we are.
So you think we go above 1,5 at some point this year?
No, so I'm putting it in range. I said there's a plus. If we appreciate,
Yeah.
I don't think that either direction we go is more than 10%. So if we appreciate or depreciate, I think maximum 10%.
That's not the
Yeah, so I can't see any shockers.
I mean, I don't see a real shock. That's what I'm
can't
saying.
see any
So,
shocks.
well,
I need some more time to think this through, but I can't right now today. I can't see any shocks.
I mean, Mayo said we're decoupled from oil, so I mean, before it would have been oil shock.
Yeah, but
Nice.
that's
No, but
You
a
don't
significant
believe it?
reduction in oil price.
we decouple.
Well, we are.
But its perception is not.
We
We
are
might be in actual, but perception is not. And perception is still.
I
still
think
rules the
I agree
markets.
with Mayo that we are to an extent decoupled from the oil price. When you look at the proportion of oil price in fiscal revenues, the proportion of oil price in reserves, and even the proportion of oil price in exports, right? And we need to also look at changes in the current account because I think we underestimate basically our importation of crude there's a new export line in our balance of payments, which is petroleum product exports, right? So basically that portion we used to import, I think if you look at the 9 months data, we exported about 4.2 billion worth of petroleum products in Nigeria last year. And I think some people are saying analyze we might do like 8 to 10 billion. So that has gone from basically a drag on FX to a positive supply. So that is big. So the point is I was trying to make is, so Mayo is right that FX impact of oil on FX on FX
Actual.
on a status quo basis is changed.
Yeah.
However, the positive delta and this good story that will anchor the exchange rate in the short term, I think has to come from how the oil side of the current account performs, either from a pricing or from a volume perspective, right? What do I mean by that? So, I mean, you guys saw the news around the forgiveness of NNPC debt. It wasn't really a forgiveness, it was a net off, right?
Yeah, it was a net off,
Right.
essentially.
That's basically, if you look at NNPC data, NNPC has gone from supplying zero at some point in 2023 and 5 million a month to the Federation to roughly $500 million every month. Now that this backlog is cleared and has been netted off, the expectation is that number is going to trend towards 800 to 1 billion a month, right? So a lot of that, right, is predicated on our view that oil price doesn't collapse. If oil price collapse, that
Number goes
800 could become 400 or could become 500. So that's why I said the forward outlook for Nigeria, at least in the short term,
It's still
is
oil.
still anchored
Yeah,
around
oil
how
pegged.
oil price performs. Yeah.
If oil price collapses, what happens to the Naira? That's just assuming hypothetically.
What do you
it
mean by
does
collapse?
If
Give
it
me
falls
a
to- if
range.
it
Well, like
falls to
$40.
below 50. Yeah, it falls to the $40 range, below 50.
I don't
Do you
see
think,
that.
do you think the exchange rate has the support?
It does.
I think exchange rate has support,
For-
but
well,
there's
how-
there's always
for
going
how
to
long?
be.
You-
It will weaken, but it will go to like 1.6, right? The beauty of having a price modulation mechanism, and I think this is something that we don't speak enough of. We've gone through a macro reset in Nigeria, and we are now letting price dictate capital
Yeah.
allocation.
Yeah. So that means if it's too
across
cheap,
different parts of the
if it's
economy.
too cheap, it gets affected.
Right.
If it's too expensive, it gets affected.
So
and that's good.
two things will happen. Naira will weaken, but at $40 oil, in addition to Aliko Dangote's trade war with the importers, what will happen to PMS prices?
It'll come down.
Yeah.
Right. So
So benefits.
So inflation
to a
will go
degree.
lower,
Yeah.
or at least
Interesting.
won't change by much. So I don't think, and this is the beauty of having pricing shock absorbers.
Yeah.
Because before, CBN balance sheet will just take the hit, boom, and we will start pretending like everything is okay, and then eventually it's almost like you have this dam, and the pressure builds up in the dam. What we have done in this economy is that we have created release valves that allow the pressure to dissipate fast. What happened in the past is that we close all the valves, and then the pressure builds,
Yeah, and then all of a sudden we just have to open it once. and then it just takes a hit.
So as long as price modulation mechanism stays in FX, price modulation mechanism stays in rates, price modulation mechanism stays in PMS,
Yeah.
I actually think our ability to absorb shock is much
Becomes
better
more.
than it has been since Obasanjo era.
All right, guys. GDP. Where do we see growth? Are we stagnant at 4, between 4.5? CBN is saying 4.8% or thereabout.
And CBN don't reach 4.8. Where will they get 4.8?
Yeah, that's what they're saying. I mean, I went to around, we did 4.2 the other day now. So,
Yeah.
That was for
They're expecting 4.8% thereabout. Are you guys pessimistic?
Trying to see
what does it look
what
like?
drives that.
Yeah.
I think we do. I mean, I don't like doing point estimates. It's always
Sorry, they are
scary.
saying 4.49%.
I think we would do that.
4.49%.
Between
think-
4 and 5.
Yeah, I think
Yeah,
that's
that's
it.
why
I think,
yeah,
but
I'm
again, I don't
between
think that's
That's
what
kind of
gets
like
us.
our max, though.
Yeah.
Yeah, that's where we are. And
I don't see how
it's a steady growth.
you were making this argument in the chat, and I
Yeah.
disagreed with you.
Really?
Yeah, because like
I don't see how we go above 5. Not possible.
so, again, like GDP forecasting is there are lots. Okay, for example, oil GDP, small number now. Maybe we'll do 6-7% next year because like there's been $16 billion of commitments since 2024, since the 4 executive orders that Shiwaju passed in 2024, right? I met with Seplat 3 weeks ago, and what they were telling me is massive capex program on gas, on oil. I don't have relationship with the RIDL guys, but I'm sure if I sit down with them, it's the same story, right? There's also the marginal speed licensing round that is currently ongoing. I know NNPC is also in the middle of selling some non-core assets, right? These are going to marshal capital into that industry. And so growth can surprise you on the upside there.
So,
No, but that-
despite
it's not-
everything,
it's not enough.
are they going to give you
But I don't
500?
think-
Are they going
but
to
I
give
don't
you
think the
500,000
GDP
barrels extra per day? Not
I mean,
possible.
500
but I don't-
barrels extra.
Not happening. So, what does that translate
so the
to?
question
Yeah,
is
but I
like,
don't think
so
the
this-
GDP comes
this-
from
all
oil.
these- all these
I
things
think that 5%
So,
comes from
the other
other.
part is okay. The big when you look at our GDP,
Yeah.
the two biggest drivers is agriculture and services.
Yeah.
Right.
Yeah.
Services
So-
is already
Agriculture, obviously, there are a lot of structural headwinds there, so that's always a drag, right? Unless we can fix supply chain issues, reduce post-harvest losses. So I don't think agriculture is going to be where the answer comes from. I think services can positively surprise you. And
what to get that above 5%? Because I think to get that above 5%, you need to now. I think to get that above 5%, you need to fix the holes in agriculture.
No,
Right.
so
That's why I think we don't get to
agriculture.
above
So you
5%,
need
that's
improve.
fixed.
You
And then
need
we need
every
that
part of that GDP
manufacturing
match to
And then
work.
don't forget, manufacturing
Right.
has been underperforming for a while. The manufacturing
Again, I think manufacturing is probably the dark horse that when rates normalize can actually shock you. If you look at PMI data that is coming out from the CBN, right? There's capacity expansion happening in construction. There's capacity expansion happening in mining.
Mining, yes.
Right.
Yes. Yeah, yeah.
So the point I'm trying to make is like, and obviously
This
agriculture has
being
been
captured. That mining one is even being captured.
so the that's a separate conversation. But the point I'm making is obviously manufacturing has been under the water
Massively.
because of working capital demands
FX as well.
and the impact of FX. They are both linked because you're having working capital problem because you can't get financing from the bank and you can't get finance from the bank because of the cost of capital, right? As interest rates normalize, and on top of that, right, you have because there's a huge import component to our manufacturing industry. So a large extent, we are basically a final manufacturing leg for a lot of products. We don't do the hard yard manufacturing like the Chinese do. So in a volatile exchange rate environment, your input cost is very difficult. So factories and capacities are gone. Now we have exchange rate stability / appreciation in the exchange rate, right? Working capital needs are now clearly defined, right? And then on top of that, right, you then have people needing to import what they need to import to put the capex on the ground to invest in the capacity.
But also-
I mean, PZ cousin that wanted to run away from the country are telling you now that they want to add capacity.
Yeah. But also, this is also why we need that 500 to 1,000 basis points.
Just because of one part of the economy.
Because of an important part of the
How big is
economy.
manufacturing?
How you came back to this.
How big is
my
manufacturing?
Listen,
Honestly, if you want to get your
manufacturing
GDP
growth-
right, I think services will shock you. Real estate, don't underestimate
God,
that. Especially with
I don't think we should
level of
underestimate.
capex,
I don't think we should underestimate the
construction,
impacts.
real estate. There's
So
a lot of
I-
infrastructure projects
I was
happening in
saying- I was-
Nigeria.
I was-
with
I
this.
was saying in the group that if you wanted to see 7% GDP growth rate,
7 is hard.
No, but
let's
finish.
even
Because
say
I missed that
6%.
conversation in the group.
if you wanted to see that, right? Let's even assume you have mining at 80% GDP growth rate. Doesn't
It won't work.
move the
It's
needle,
agriculture and
right?
services.
So you need. Let's even say crop production doesn't even do anything. you need to see trade at double digits. You need to see real estate at double digits. You need to see telecoms at double digits. You need to see construction at double digits.
Financial services
Then you
at
need to
double
see
digits.
financial services at double digits.
We are
And
at
then
double
one dark horse, either of crude oil palm or food and beverage. And that's food and beverage under manufacturing, nothing else. If you start to hit double digits in those subsectors, then
You start seeing
you
your
can
plus
start to
5.
see plus 5 into 6% GDP.
You don't think that's
Now,
feasible?
Not
the
this
question
year.
is, what's
Not
going to
this year.
drive it? That's where my argument was
okay.
from. So I looked at it like, okay, what's going to drive this growth rate? It's either there's massive debt being pumped into the economy, or there's massive fiscal spend. Because
We don't
that
have
spending
fiscal
has to come from somewhere. Because or there's increasing wages. Because
Yeah, but if
what
Yeah,
has-
but you
what's going to
can't,
stimulate
you can't
that?
increase wages.
That's my point.
without-
So wages probably would not cut it.
Yeah, wages is
So,
like the.
yeah, so you're probably
it's
looking
almost
at
a
either
secondary
massive,
private, what
massive.
about private sector credit?
That's what I said. I said credit.
Debts, yeah,
Debt.
yeah, yeah.
So
Yeah,
it's
private
either
sector.
debt, it's either credit.
Yeah.
And so that's why I said, but the manufacturing guys are not going to spend big when they are borrowing. at
That's
20%.
crazy, and that's why we need that shrink in NPR.
It's not going to happen.
Yeah.
Yeah, no. So you can.
I'm not saying we don't need.
You need it,
Say
but
we
you
need,
can't have-
we
but you
need
can't have
macro
it.
stability first and foremost.
agree.
But macro stability is
And then after that, we will now for it's very
it's
very
here
limiting,
enough
though.
fragile.
It's here enough
Man,
to
I've
become
seen
fragile.
many
It's here
reforms
enough
in my
to
life that unwinds, and when it unwinds, you lose credibility.
It does, though.
It's
I mean,
like,
it's a risky play, but my point is, how long are you going to sacrifice growth on the altar of, monetary policy?
if we can anchor inflation
So
expectation.
now you're Trump, right?
I'm not sure. See, it's just real. We're just being real here. Do you understand? So I love.
I think you have to be careful. We can't have it all. So you have to start.
So
we have to start
exactly.
choosing.
So you gotta ask yourself.
but
what do you want?
I think 4.5 GDP is the first time we are growing income per capita in how many years? Let's take the win
Has income
first.
per capita really gone up?
Yes, now our population growth rate is like 2%.
If you adjust it for exchange rate, it hasn't.
You are complicating the maths. You are bringing both denominator. No, but think about it. For the most part, since Bubu came, we've been growing between 2 to 3%, 3 points. Population growth rate at 2%, 2.5%, right? So we have
GDP is
we have
double
not
population
moved.
growth,
We have not
Yeah,
moved.
GDP growth is
but
not
now,
double.
at least you will see. But the productivity at the moment is a bit concentrated, so it's not yet widespread, and you're not seeing reduction in food prices that makes everybody happy. So macro is fragile, and I admit that. But we take the win that actually we have positive growth in income per capita for the first time since Bubu took over. That's a win. The question now is that we need to kickstart an investment cycle.
Which
Right?
and where's that
And
gonna
how
come
do we
from?
do it? There is this report that Mayo spoke about, DGAS, right? I think it's probably one of the more coherent development plan that I have ever come across, right? And the idea, I don't know if it's going to be implemented or not, but the idea is really around creating a sort of KfW, the German Development Bank that basically funded the reconstruction, or something similar to Banendes, which is Brazil.
Don't we have that already?
Right? No, but want to create like a massive, big one that can channel capital both from private sector and using government balance sheets to at scale into big sectors. And obviously priority sectors where I think there are lower hanging fruits is definitely gas. There's a lot to be done with gas in this place. And I mean, like, I don't know with the level of gas we have, why every home doesn't run on LPG. You can solve that problem.
That's the anyhowness.
Yeah, you can solve that problem. Second is obviously we all know that NLNG is operating sub-capacity. Seplat has told you that all the gas that they are currently flaring in Sepnu, which is the ExxonMobil asset, is going to NLNG, and they are going to build the infrastructure for that, right? I mean, we were running some numbers to basically estimate, right, how much they were flaring, right? And I think we estimated that about 500 million, if they are able to monetize the gas under current pricing environment, Seplat will be able to generate incremental revenue of $500 million on that gas asset. And obviously, the margins on gas is much higher than in the oil. So it will even affect the multiple, which is why I'm sure Oga entered the assets recently, but we can come to that. We can come to that. But the point I'm making is, like, I agree with you that if we do nothing under current on macro stability alone, if we anchor our growth on macro stability alone, I think equilibrium is between 4 and 5%. Right? So you need,
or could even be lower.
Jesus, maybe, but I think between 4 and 5%. But if we are able to kickstart an investment, but that investment cycle kickstarting, and this is why I was so pissed off about this equity market stuff, because you need to be able to commandeer private capital, and in order for you to be able to commandeer private capital, you need lower cost of equity, which is why this excessive borrowing also worries me a bit, right? So again, it's like balance of probability shifting, right?
All right, guys, we're almost out of time, but I want us to touch on equities before we go. 10 minutes and we're done, because we're almost on the 2-hour mark. In case you didn't know.
Almost on the 2-hour mark.
It doesn't feel like it.
So it doesn't feel like it, right? So 51.19% last year, NGX closed. One of the best we've seen in years. I think
75.
the 71 was sometime.
You did 75.
You did 75. Cheers to you.
Cheers.
Yeah, in fact, I think we're doing some analysis at Nairametrics recently. We're looking at the best performing equity.
I'm probably number
mutual
2.
funds. I think we're number 2. Stambik, I think, was 1.
No, GT dividend income fund. That thing, I don't know what they have. The thing is vexing me. I don't know. It's a smaller fund.
Yeah, but Zox was number.
There's one Halo fund, but it has only 100 million in assets. So I stripped that out. But instead of the ones that have real money, right? We're down the second largest listed equity mutual fund, and then we're the second best performing.
Oh, congratulations!
Congratulations to that.
So you can see Arnold is coming.
That he's knocking on. Arnold is coming though.
We're going after
Stambik. All right. So do we see repeat performance this year
of equity markets?
Yeah.
I think this is actually the year where Nigeria can actually be an outlier.
Positively or negatively?
In what way? Okay. Outlier from the rest of Frontier? Because Frontier did well.
I mean, I feel like equity can really do well this year.
But okay, sorry.
So I do think that what we did last year, 50%, I think something that we can.
I'm sorry, my 75% is net of all my fees, by the way.
Oh, so you probably higher.
So you probably did higher. I think we can actually we can repeat the performance.
Wait, 2020?
That's my view.
2020.
That's my view. I think we can repeat the performance.
20
I think first of all, if you look at all the industries, oil and gas, definitely set to do very well. Banking, I feel like the banks will be able to. If you look at all the borrowing plan and all of that, banks should be able to drive. Again, with better balance sheet, we're able to drive loans and investment income. The worst is behind the manufacturing. So you should still be able to see. I think you should start seeing 20%.
So you think fundamentals drive stock prices this year?
I mean, what else should drive stock prices?
I mean, last year was more of capitalization, companies needing to raise capital.
So I'm saying that fundamentals now is what should drive
juicing up their share prices. You're seeing stocks do 400%.
Yeah,
I know that.
But
I'm not skeptical. I'm just saying.
I think the environment for fundamental
it's cleaner.
Is cleaner.
Yeah,
it's a cleaner recovery.
So this is this year is fundamental
performance. Yes.
Performance is anything 67 Naira. I mean, GT is 90.
GT is hitting 100.
Yeah, but I think more upside. I think there's more upside going into next year. I think.
Is this a sell side kind of analysis you're doing?
No. But I'm looking at it. We haven't even begun to scratch the surface. We haven't even begun to scratch the surface of what
what's the thing? Central Bank said you guys must do. What's that? The bad loans, what they
forbearance.
That's
cool. Market shrugged it off.
Yeah,
but that's cool.
Market shrugged it off.
I mean, it just basically
market shrugged it off.
I mean, that's done.
And our banks have raised all the money.
And then there's more.
So to Sam, they've all met their recapitalization target.
No, apart from FCMB.
FCMB hasn't.
FCMB is almost done from my feelers. Almost done. So aren't you?
Ted Dollar is asking for 1 trillion Naira
let's not even get there. Well, at 500 billion, aren't you like?
Well, comfortable with the
Aren't
banks?
you like pleased that they did it? Are you surprised?
I
we didn't think it was gonna happen.
I think some banks surprised me.
I thought it
Some
was
banks-
impressive. I'll
banks
just talk
surprised
on
me.
equity market outlook quite quickly and how I see things. Obviously, I want to make a point around the fact that the Nigerian equity market, despite the rally, hasn't seen any multiple expansion. What you've seen over the last 2
What do you
years,
mean multiple expansion?
so PE haven't gone.
Okay, yeah. No, we haven't. Yeah, we
Hasn't
haven't
moved.
With,
So it's been a nominal earnings adjustment with companies readjusting to the current
macro environment.
reality.
Simple.
That's what
Yeah.
has happened,
Yeah.
right?
Wait, repeat that again.
It's been a nominal earnings adjustment. So in the banking sector, earnings have adjusted because of the balance sheet
Consumers.
structure. Consumers have had to increase price to catch up with the macro reality. The same thing in MTN. The same thing in that. So
Yeah.
nominal earnings, not
Even
real
valuations
earnings.
too.
Nominal earnings have readjusted and nominal share prices has caught up to that adjustment. Correct. When you go through after that phase, the next stage is then you now look for real earnings. This is where you find real businesses that are generating positive return on invested capital and growth and compounding. Those businesses, the market will identify them and put a multiple on them because the market is anticipating future growth and compounding stories from those companies. So this is a market that I think on a headline basis, the market will do well. But if you get your stock selection right, you will even outperform more because the best performing business are going to spread out of the pack, right? So that's the second point on the fundamental side. The other one that people don't talk about much is the impact on flows and positioning on psychology. For the second consecutive or the third consecutive year, equity has hands down beating any other alternative assets that local investor can buy. It's outperformed dollar, it's outperformed fixed income, it's outperformed real estate, right? And when you look at the capital allocation construction across anybody with portfolios in Nigeria, the equity portion of that allocation is tiny.
It's the smallest.
So when you combine return with strong fundamental story
There's more to
and
come.
flow,
But do
There's
we
more
have
to
do
come.
we have the companies to absorb this sort of capital?
That's why you get a bubble.
Without creating a bubble, exactly.
That's why you get a bubble.
That's my point.
Yeah, that's why you get a
Yeah,
bubble.
any new listings expected?
Dangote is coming, NNPC is coming.
I hope he lists the fertilizer.
That's an
Yeah,
interesting
it's-
business.
I hope he separates them. I don't. You should- fertilizer and not and I think there's so much
Let
risk.
him fight his war, finish.
Exactly.
They could
In
probably
refinery, then let him come and list
have
after.
a couple of energy companies listing as well. I mean, power sector companies listing.
Oh yeah,
know,
you know some.
But there's a lot of surgery being done there that some of these companies may become quite viable, right?
Yeah.
So I don't know. Let's
I mean,
see.
power is not clean enough for me just yet.
It's not clean. It's not clean.
enough for me just
It's
yet.
not clean.
I wouldn't touch an NPC if he came for a listing.
Really?
I will though.
No, you have to.
I will.
You actually have to.
I'm not-
That's another Aramco.
I mean,
That's our Aramco.
I mean, if
basically. And
so-
it's good- and it's good.
so-
but it's going to do what Aramco.
if they break it up, right, or there's just better visibility around.
I mean, it is listed. It's
With
gotta
my
be.
experience with national oil companies, the government cannot allow the IPOs to fail.
Exactly.
No, it's
That's what
not.
I'm saying,
It's not going to fail. It's not going to fail.
Aramco.
It's because they're going to put a gun to your neck.
You want to get that pre-IPO.
to support it. It's not going to
You wanna
fail.
get
I'm
that
just saying is
pre-IPO.
I'm not sure.
So what are you guys looking at this year? 10%, 20%? 50%?
Actually, I think we can.
I think it does much of the same as last year. I won't be surprised.
Yeah.
Yeah, why
I think
not?
yeah,
You know,
100
we're still 80% below our 2007 high in USD. We're still 80% below our high.
I think we can repeat the performance.
Wow.
Yes.
I'll check.
We're
that
still
number.
at
I
6-7
will check
times
that.
PE
Where are we
versus
at?
the rest of the world that's at 20 times PE. We're still cheap in every single way.
In every single way.
Yeah.
No, I think
and that's why I shrugged up the CGT to a degree.
What else?
And that's why I shrugged up the CGT to a degree because I know that we're still cheap. We still have more upside to go compared to what we are.
we didn't shrug it off. We're waiting for
Shrug
the
it
deadlines. We are waiting for
and
the
then
deadlines.
it's still a potential.
last minute deals close at the end of the year.
It was interesting, right?
And then it's still a potential. And the
for my freelance, it was also because of
upgrade.
CGC.
There's still a potential MSCI upgrade that could happen this year.
No,
to bring that inflow.
No, MNCI
Yeah.
can't happen this year because
You think it will happen this year?
Yeah, because the MNCI is a process. They have to
You
first
think it will happen
tell you that they want to
2026?
do it, and then they go into consultation, and then after consultation, it's
So you
usually
think 12 months? You think 12 months will
18
cover
months
it?
to 24
But
months.
the- but-
2-year
but
process.
haven't we been talking
Yeah.
hasn't the NGX been talking to
Can I
MSCI?
ask Jude and tell me that? I don't know.
They haven't been.
You can ask them that.
Okay.
But I think
I assume the conversation was already
FTSE
been
Russell
had.
is likely going to go in in March, and then if
FTSE,
but the cash that tracks FTSE is not a lot. It's going to go in March, and if the consultation is successful, it should be included in September.
As
So that
FTSE.
that one can happen.
Yeah. How much cash comes in? Do you know?
I
Roughly?
haven't done the math, but
not a lot.
Frontier as an asset. The beauty is that this is another part again. Frontier as an asset class last year has done amazingly well.
and becomes more interesting to
With
more
Nigeria,
people
with
going this
Nigeria
year.
included.
Nigeria is
Nigeria
not.
not
We're
included.
standalone.
It's not
But some
included.
Frontier would take Nigeria as off-index bets, but because they are off-index bet, if it goes wrong, you will see the firing.
I mean, we
door.
had Ahmad. We had him here last time, and
Ahmad, yeah.
yeah, he was quite bullish as well.
No. So this is what I'm saying. So the way these markets work is, I think George Soros is the guy that writes a lot about this concept of reflexivity, right? And that's what we will experience, right?
Yeah,
That's
yeah,
what
yeah.
we will experience.
Yes.
Like good things feed on good things, and then
Yes,
good things feed
yeah,
on good
yeah.
things,
And then the
something
fundamentals then
happens-
match the price. Over time. Yeah.
So
Any asset that can compete with equities this year, you guys looking at as well beyond equities? Any other assets?
Yeah, I like private
That
debt.
would-
and
that
we
would
talked
give
about private
50%
credit,
return.
private debt.
Who? And anybody going to invest in private debt?
that probably did have
I'm talking about
serious
investable
skin.
assets.
Choking, yeah.
Just
Oh, really?
be careful, man.
Man,
be
it's
careful.
been the exact opposite for
Well,
me.
when you say private debt, how do you mean?
I'm getting better at it.
When you say private
Uh,
debt, how do you mean?
So
Is it
Like accounts receivables, invoices
Yeah.
counting.
No, but how can retail investors? I'm looking at what retail investors can invest in. People who are
I mean, you
watching
can. This is the innovation that you're supposed to bring to the market. You can create a fund,
Which
that
is where
can
we
do
are.
this
Which
stuff,
is
right?
what we're
I
working on.
I wanted to do it. So I was testing
worry.
with my own capital. I
How
think
How
I
does
was
that work? Investors can invest in you, and then
It's
you,
a creative fund.
Yeah.
We're creating a fund that's
So
a
it's
private
very
credit
similar
fund.
to what
and then
Bolaji Balogun has in infrastructure, but you
fund.
just do
But
it
it's just
for
private credit.
debt.
so what sort of yields? What sort of yields come out of
You
that?
can get up to 20-30%.
No,
you can
even
get that in-
higher.
Wow.
Even
Well, it
higher.
depends on what you
As in,
people-
if I give
so-
you 10 million now, you're gonna give me 3
yeah,
million.
30%. Yeah.
On private credit in Nigeria, you can do it for
You can
sure.
do it. Yeah,
For
yeah,
sure,
yeah,
you can
yeah,
do
yeah,
it.
definitely.
The problem is we get the money back. no, but,
No, you can. You
beyond-
put processes and structures in place. You
Beyond
can.
private credit, equities, what else? Fixed income, you guys?
I don't.
So
I think
fixed-
fixed
so-
income will give you 20-25%
Yeah,
return.
fixed
In your,
So
in your
I'll-
portfolio, how are you allocating your portfolio this year?
So if-
If you look at your portfolio, what
Only
you
me,
looking at?
I go big or go home. I'm
Big on equities.
I'm equities fully. My balance sheet is. I mean, I have legacy.
Dollar-based assets.
I have legacy venture. Asset. Well, I will still look at other transactions and other deals in the different pockets of what we do, but the marginal cash inflow that I get at the margin is going to go to the equity market.
yeah, so I'm equity
And I think
private
there's
credit.
there's a big opportunity in equity spaces here. Again,
Yeah.
what we talked about is policy mistakes
Yeah.
and the things that can truncate. But I think that there's a massive opportunity for
I'm surprised everyone's skipping over precious metals. I mean, we've seen
I-
precious metals have done 10%.
But we're talking about Nigeria now.
Nigeria.
We're
Yeah, but you
talking
can
about-
still get
you
involved
can
in
buy
precious
gold
metals
now.
now.
with what?
Come to
So we
me.
used to buy gold here.
I'm buying gold here. I'm still buying gold here. So I
All right,
see.
come to Arnold. Everyone, it's been a long session already.
Palladium's
Time,
done what,
man.
10%
Time. We
already in a
gotta
few
go,
days.
we gotta
Okay.
go, we gotta go.
All right.
This is a new year. If I leave the gang here, we're gonna keep going on and on and on. This is the first part of several parts of our outlook for 2026. We haven't even scratched. We haven't even talked about regulatory outlook.
And we talk about individual
regulators,
stocks.
individual
stocks.
stocks. We haven't even gone to. We haven't even talked about jobs, different things that we're gonna look at. I'm gonna try and drag Sam back sometime this month because this is important, Sam. We need to talk about.
Yeah,
so
January
we're
is
gonna
a big
drag him at some point in January so that we can just close this. And then so February we start with our normal routine. But this January is purely going to be, different views on economic outlook for the year. This has been Drinks and Mics. Thank you so much for being a part of this. And we will be having Tunji back hopefully next week. and another guest as well. So until we do this again next time. Any parting shots, by the way? Any parting shots for the year?
Stay liquid.
Yeah, stay liquid.
Oh, you are bullish. You're saying stay
Stay liquid now.
Arnold, any parting shot for the year? What's guiding you this year? What's your like? He's a stay liquid this year.
I'm fully invested this year, man. I think this year is more of the same of last year, but with more confidence.
What's your parting shot? What's your watch word for the year? That's just stay liquid. I like that. Stay liquid. What's yours?
Bye.
Oh, wow, that's deep.
Bye.
Stay vigilant.
Stay vigilant.
Yeah.
Okay. Anyway, mine is don't be a fool. Don't be a fool. Until we do this again next time, do have a profitable weekend. Bye.